Alphonse Soued, thank you for being here.
My pleasure.
This is a very special. This is so I've wanted to talk to you for probably for the longest time. You and I played golf at a charity tournament together. I don't know if you remember, but it was a while ago, probably 2 years now. But you're really very unique when it comes to Trillium. Like maybe singular, I think, in the sense that you're a true portfolio manager. You're not really a trader. So this is gonna be different. We're getting out of my wheelhouse. I really thought about the questions to ask, but I'm really excited to have you here. Thank you for being here.
It's great to be here. What's funny is when people ask me like, "What do I do?" and I tell them, I'm like, "Oh, I'm a equity portfolio manager," and they always say, every single one of them, "Oh, is that like a day trader? Are you a day trader?" And
Okay.
my response is always, and I absolutely feel this way, is if I was good enough that my stocks would go up the same day that I bought them,
Okay.
I would be a day trader.
Would you really?
Yes,
Because
absolutely.
that's so interesting because I I mean, I feel like for me, and I feel like a lot of other people at Trillium, maybe it's just the grass is greener, but I would love to be able to do what you do because I feel like it would let me be a little bit less chained to the desk and scale, obviously. So I don't know, maybe throughout this conversation we'll come to some resolution
That's
about which
funny.
is the better, I don't know, the better format. I'm not sure, but anyway, um, let's get started. How did you find yourself at Trillium?
Um, Great story. Uh, so I graduated Columbia Engineering in 1995,
Okay.
um, and without a job, um, kind of envious of all my friends who got their job offers, making like 40K a year or whatever it was back then, which was decent, really good
Okay.
money. You could kind of have your own place and live in the city and, buy whatever you want, kind of. Um, and I had no job and um, was in at Columbia looking through their off-campus job listings and going through binders, and I just applied everywhere. And one of the places I applied to was Schwarz and Associates,
Okay.
and I didn't even know what it was. So one day, meanwhile, I didn't go back. I grew up in New Orleans. That's where my home was, but I didn't go back home. So I was crashing on my friend's couch in the city somewhere. And I remember we I we get home one day and there was like a message on the answering machine at my friend's apartment that I was to be interviewed for the trading position. And I didn't even remember applying for anything like that. I didn't know what trading was. And then I look through all these scraps of paper at every place I applied, and I saw it's like, oh, trading position, $800 a week, and I'm like, amazing, can't wait. So went to the interview, and it was Barry, conducting the
Wait,
interview.
so this Trillium at some point in '95 was called, because
Well,
I
it was
know about.
Daytech back then.
So what's Schwartz and Associates?
That was his.
Just
I
like
guess
his work post or something?
he was. I guess Barry could answer that better than me. But
Okay,
that's
fine.
what it was. That's what the application was under.
Okay, that's funny.
So yeah. So Barry interviewed me. Um, I thought it was like super exciting, and he was like, "Okay, you'll come back for the next interview," and then that was with Eric Mashler at the Daytech office. This was on 50 Broad, and then that was it. I got the job offer, and then the rest is history.
I really have to unpack that whole history now. Okay, so did you have like a trainer? Like, did they have trainers back
So
then?
yeah, so you sat next. It kind of like it is today.
Okay.
Um, I sat next to John Tansman, who was my trainer. And it was like a very disciplined, just like hard hat and lunch pail, like come to work, like sit down, like this is what we do. And back then it was high bid join. There's probably like maybe only Cary Grill gets that reference.
Okay.
Um, but that was like the formula to buying stocks. Um, and just watching four letters tick on the screen. No one knew what anything did. The internet didn't even exist at this point, or barely. So it's not like you could Google search what these 4 letters were and find out what this company did. Um, and there was no charting, which is interesting because I eventually, like, all these symbols that I was watching every tick for every second of every day for years, like, I had developed like their own charts in my head.
So you're just looking at, I guess, a level 2 box and a ticker.
Yeah.
There's no GICs. You don't know the company name or the sector or
The
charts,
name I think we knew, but yeah.
and obviously no news or anything like
No,
that.
I don't even remember.
That's hysterical.
Yeah. Like there was a news machine, but I think it was mostly useless.
And was his name was John Tansman, you
Yeah.
said. So was Tansman a day trader or was he a
Yeah,
long?
we were all day traders. So
Okay.
the truth is back then it was like day trading and overnight.
Okay.
So a lot of people were just closing out at the end of the day, but I would there were stocks that like always ticked. So back then it was 25-cent spreads. Like so if you had like if a $20 stock, it could be 25 or 50-cent spread.
Mhm.
Like maybe at best it would be like in like 12 and a half. So everything was in fractions. So it was like maybe an eighth of a dollar. Um
Okay.
so um and there were stocks that were very active, traded a lot of volume, so you could get in and out. Um, but at the end of the day, many times you were just caught with a stock. Like, let's say you bought Microsoft at it's 20 by 20 and an eighth, and let's say you bought it at an eighth. So now you're holding it, hoping to sell it at a quarter or 3/8 or whatever you can. And then let's just say it kind of slowed down and kind of stopped. And now it closed the day at where you bought it. So at that point, you're not just going to lose $125 and just hit the bid, and you're not going to do that. So you're going to hold it overnight and continue the next day.
Mhm.
So there was a lot of that. But um, so you had stocks that like ticked a lot, and then stocks that ticked a little, and then in between. So depending on what you were in, some people shied away from like the slower moving stuff. I did not. Um, So I naturally was, if my buying power was 1,000,000, I was going out with 500,000 or 1,000,000 in stock overnight. So already, like when we were trading back then, it was day trading slash overnight,
Okay.
and I was going out overnight with stocks.
But it was mostly like market making type stuff, like
Yeah,
making spreads. It was
yeah,
okay.
yeah.
Nice. And so, okay, so how do you go from, you're obviously making markets essentially, and your trainer's a day trader, and I assume Schwartz and Co. or whatever it was
Well, you're
called.
not making markets; you're going against the market makers. Like that's what we were doing.
You're trying to make the spread, right?
Um, n- on some trades, you could do that.
Okay.
On other trades. So sometimes you're taking liquidity, other
Right.
times
Yeah.
you're
Okay.
giving.
But you're not
Um,
like trading news,
no,
right?
no.
So how do you go from that, like in a day trading shop with a day trading trainer, and become like a longer term portfolio manager?
So this goes back to the first question, which was if I could, I would have been a day trader. So after a few years, um, I went through a rough patch. I mean, I went through a number of them, still do, still today. Um, and um, I got to a point where this might have been in 98 or around that time, so 3 years in, where I just couldn't make money day trading, overnight trading anymore. And then I basically had like a moment where I just flipped, like, and the really the stock that kind of changed everything. It was kind of like a moment where I just completely flip-flopped was Yahoo. So, um, in in that time frame, it was like 98, I forgot when exactly. I had just had a bad day. I think I had lost like 10 or 20 grand. It might have been around 20 grand, which was horrible. Like that would be I was the type of trader that was making money every day. So whether I'm making 0 or 3 grand or 5 or 10 or 15 or 20, I was making every day. Now I had like a bad trade where I lost 20 grand in one trade, which like never happened. Um, and I just got so angry. And at that point, I'm like, if I'm going to waste $20,000 on absolutely nothing, like it just felt like betting black in roulette and then you lost. And now what? Like, um, and I'm going to, I might as well spend this 20 grand in risk. I'll buy 2,000 shares of Yahoo and I'll give it 10 points. And then, because I know it's going to double, like at the time it was like 130 about 130, let's just say. And maybe I'll give it 20 points, whatever it was, like give it a number that's so big that I'm not worried that I'll get taken out. And I know it's going to 200. And that's what stocks were doing back then. So, that wasn't like a crazy call to make. And so that's what I did. And then it kind of messed around, like I did it. It kind of messed around in that price range for a little bit. And then in like I don't know, 1 week span or 2 week span, it went from 130 to 200. And then back then, they had something called like a big brother where everyone had traded their trader initials. And so you could see on the screen, like mine were AX, even though it's not exactly your initials, but it's similar. So you could go see how everyone did on the day. It was like very competitive, but in a good way. Like everyone was rooting for each other, but also like wanted to beat each other, you know? And so that day I was number one. I think there was a day where I think it was up $25 and I had 4,000 shares and I made 100,000, and while others were making 10 or 20 or 5 or whatever it was. So it was that, and everyone was like coming over, like asking questions and et cetera, et cetera. So um so that was really like that was the turning point. And so seeing that success, that's kind of how I just made that pivot. At the same time, I am noticed that it's all about pattern recognition, right? So I'm noticing patterns that are longer term. I can't figure out what's going to happen 8 seconds later, but I can figure out, oh, like um, maybe it's in this range, but it's probably going to break out, and maybe this risk is this risk reward situation. I'm gonna hold a bunch and let's see what happens. So
That's so interesting, and it's even more interesting that you did this basically in a firm with no resources for this. Like Trillium is set up for day traders, is what I mean. Like by
right,
that, it's mean like it's a huge emphasis on being fast. 99% of the firm is trading intraday, maybe overnight or something. Something akin to that. And so you're kind of siloed off, and you figured out how to do this all on your own, which is just insanely impressive to me.
yeah.
Um, that's amazing. And so you've had at least one trainee, the famous Howie
Howie,
Titleman.
yeah.
Have you had more than that?
So Howie actually was at Columbia with me.
Okay.
And I met him actually through the same friend who I crashed on his couch. That was his like second cousin or something, or
Okay.
first cousin, I don't know. Um,
Howie must know you real well, by the way, because when I emailed you to ask if you would do this, Howie texted me to let me know that Alphonse will never check his email. So
Text is best, right? Yeah.
yeah.
So I first met Howie maybe my sophomore year or junior year in college, and he was having the same major as me, and because his cousin told him, and so he comes up to me and he asked for my textbook, like, do I have a used textbook or a notebook? Um, and I'm like, yeah, sure, take it. And so he every year I would give him my old notebook, and so he had my notes and my textbook. And he always said that I took the best notes, which I couldn't believe someone could actually use my notes. Like you would think notes are like personalized, like you need to like take your own, right? I don't know, but So he was grateful for that. Then by the time he graduated, so I was our year in,
Okay.
and he graduated, and he asked me, "Oh, what are you up to? Are you?" Told him about the trading job I had, and I said, "Listen, if you're interested, I'm not going to tell you to take the job, but if you're interested, um, I could probably get you the job. Just tell me." And and he was, and so I got him the interview, and at the time we were heavily expanding, so I knew that he would get the job. But Howie tells a great story of that day that he got interviewed. I don't know. Do you know that story?
I don't.
Oh
I'd
my
love to
God.
hear it.
I can't.
Okay. All right.
He got caught in the rain, and I'll let him tell the story, but he got caught in the rain, I don't know if he was late or what happened, but he came in to the interview just absolutely drenched, like head to toe drenched, like he jumped in a swimming pool. And then was interviewed. I think Barry interviewed him, and then actually went straight to his second interview immediately after the first interview. Somehow got the job um, after looking like that, I guess. But I'll let him tell the story in better detail. But it was very funny.
So I'm y you're doing all this long-term stuff, but Howie wasn't that kind of trader.
So right,
So Howie did, like, intraday stuff.
right. I'm trying to remember the year. No, at that point I was because that was my first year in. So
Okay. Oh, so you were still doing the day trading
yeah,
stuff, and
yeah,
that's why. Okay.
yeah,
And then
yeah, yeah,
so
yeah.
you evolved into the more
Yeah,
longer-term guy later on.
yeah. And I had made a decision at that point to not to just focus on myself and not to spend my time just focusing on myself rather than training people.
I wanna talk about a lot of the trades that
Sure.
you've done. By the way, you gave me a list of trades. Some of these are pretty old. I mean, we had to go to, like, the
Yeah.
library to get the charts for these things. But, first I wanna talk to you just about kinda long-term trading in general, because this has been I guess this is my perspective, but I think this is a perspective that a lot of traders at Trillium will share, which is I've tried to break into long-term trading, so many times. I'm not talking about just like a personal account position, but like, a swing trading
Mhm.
account at Trillium, or not an account, you know what I mean? Just
Mhm.
incorporating that into my day trading. And I've dabbled and I continue to dabble, and it's just been very slow going. I think the appeal for like an experienced trader is that, as you get, as you get older, it's harder and harder to, not blink. And, and so there's just an appeal to being able to like take a lunch break or step off the desk or something and have, your trades working for you.
Right.
And there's also, you can obviously scale things a lot more. But I would also say that for me anyway, day trading just is like naturally an easier thing to do. Um, and I think I'll tell you why, because aside from the fact that Trillium is really set up for it, right? We put a huge emphasis on speed. Like I said, most people are doing it. So there's a lot of collective wisdom, a lot of people to learn from. My trainer did that. But also, you get a lot more sort of repetitions, right? Like, how do you learn like anything? So
Right.
you have an idea, you try it, you you learn, you take away the mistakes, the pros, the cons, what you did right, what you did wrong, and then you do it again.
Right.
But if I'm doing, 30 day trades a day, so I'm iterating a lot. If I'm doing, you know, 30 trades a year, and then those trades take, 5, 6 years to play out, then it's just like the cycle time on that learning is just much longer. So for me, what always inevitably happens is I always tell myself, like, when we're in like I feel like when like there's a crazy market, like a volatile market, I'm just focused on day trading, maximizing that opportunity. And then when things slow down, I use that as a time to sort of, okay, let me try to dabble in this swing trading thing, see what I could figure out. And then what inevitably happens, and this has happened like 4 or 5 times, is I'll naturally build myself like a little hole from swing trading. And because the market's slow, I'll, like, feel it, and I'll just get annoyed and stop.
Right.
And then what always happens is so then, like, I've tried this, like, 4 or 5 times, but there's no continuity, and so I've spent all this money, I've dedicated this time to it, and in the end, like, I've learned nothing, and I have no new
Right.
skills. Um, I guess given that,
Right.
what would you tell an aspiring swing trader like myself?
So first off, the day trading, yeah, you have more iterations, but that allows for more noise, right? So being able to instead of having 300 trades a day or whatever it is, to have like 30 a month or what allows maybe for less noise and trying to figure things out.
Okay.
I would say so I have stacked a lot of things to have the final output of shift B finally buying, right? Um so um I'm focusing on just in no order, but earnings sector, um macro for sure. So whatever the current macro backdrop is, um also current market, and what I mean by that is, um, right now, for example, market is just bouncing around. It's not really going up or down. And stocks seem to also be doing the same thing. Like even take SNDK, for example, a wild stock. So yes, it has gone up a few hundred points this year so far, I guess. But besides that, like right now, after its blowout earnings, um, and blowout guidance, and we have demand for their products as far as the eye could see, right? And no new factories being built anytime soon, right?
Hold on, let me just stop you for 1 second. So you've
Right,
said "right now" a couple times. So first of all, I should say for the audience that we're filming this on February 17th, 2026, and I guess I'm curious what you mean by I have to sort of define what you mean in terms of timeframes, because 'cause we're not talking about intraday here. So when
right.
you say "right now," what do you like, the market's at all-time highs more or less, and it's just had, like, over the last 18 months, call it, like, an absolutely legendary run. So what do you
Right.
mean by "right now"?
So right now, I guess this year's, like the last 6 weeks, so year to date,
Okay,
maybe a month into last year, I'm not even sure.
okay.
Um, but if you're chasing momentum, which is a lot of what I do a lot of times, you're losing. But if you are not chasing momentum and don't think, don't get greedy on a breakout by holding or buying more, and don't um, and then giving up at the bottom and then having a stop loss, but rather the opposite, where you are waiting for some uh, bad day, which happens 5 times a day, right? Like the S&P will go down like a 0.5% or percent. So multiple times, not even a month, but a day,
Mhm,
right? And then a stock will go down like um, SNDK in this example in the last 6 weeks. It just is moving like 50, 100 points every day or few days, right?
mhm,
So, so if you were to, the strategy here would be to not just buy and hold. I would, but rather, when it goes down 50, buy a little. If it keeps going, buy a little more, and then maybe you'll be averaged at the lower end of the range. And then when it goes up, sell a little bit, and that's how I would trade that today, right now.
mhm,
The play, the time to have just bought and hold SNDK was obviously, if you were smart enough, which I was not, um, to know that, oh, CPU demand and flash demand is going to skyrocket, and these stocks, it hasn't hit these stocks yet, but it will. If I was smart enough to know that, I might not even be sitting here right now. We would. So right now, I mean, they 10x'd, right?
right,
So are they going to 10x again? I'm not sure. But if it is going to 1,000, then maybe I want to participate in that. Given the fact that it's a confidence thing, having been around semiconductor cycles, I've lived through 20 years where semiconductor stocks went nowhere for 20 years.
Mhm.
So now they're all going crazy. Um, so I'm aware that they can one day the music will stop and they'll go nowhere again for 20 years. Like that could that's probably going to happen. Um, I lived through the aughts where all these like the Microsoft and all of those stocks were single digit PEs, and now their PEs are 30, like 3 times that. So I've lived in a time where Microsoft could get cut in half, and that would be normal. Like, um, and you just never know when that's going to be. I mean, I remember in 2012, after 10 years of Microsoft just making money every year for 10 years, and then the stock is basically nowhere. It's not growing. It's just, and I'm like, this PE, not only should the stock double on its earnings, it should double on its PE should double. Like these are all 4x stocks, and you or potential to 4x, and you're just holding them like for years, like waiting, and then finally it happened. There are cycles, and you just have to understand that's also part of the risk. But to again narrow down like SNDK where we are right now, so I'm putting it on supply. So as long as the supply doesn't go up and it's going to stay the same, then they're just going to keep beating earnings and making money. The stock won't go down until new factories are built, and then the supply increases, and then it'll go back to like single digit PE.
So the way you're describing SanDisk is just this is something that I wanted to ask you. Is your trading, I guess, obviously it's a little bit of a hybrid, but is it predominantly fundamental or is it predominantly technical?
Both. So it's overlaying everything.
It's overlaying
Yeah,
everything.
everything.
Okay.
Um, that the hard part so the game in, I guess, day trading or longer term is always what is the catalyst that's going to take it? Like knowing why, okay, so in my case, why is something going down or why is something going up?
Mhm.
Perfect example right now, which I'm really struggling with, is Bitcoin. Bitcoin just got cut in half. I have no idea why it's going down. I'm hearing a million things. I'm not buying any of them. So, for example, people are saying that quantum is going to crack Bitcoin so it could ultimately be worthless. But then at the same time, quantum stocks are getting crushed. So, because quantum's not going to be around until 20 years from now, like is what we're hearing, right? So, I'm kind of not buying that. Um, the other is maybe AI is taking attention away from it. Um, so it's like it's sucking the oxygen away from crypto right now. Maybe, but I don't know. And then there's other things that like people said they were levered. There were all these levered positions that the market's just taking out um, stop losses, and it's just like waterfall moves lower in Bitcoin, but that doesn't, then it should bounce back. So, um, and I've heard so many different things. The new Fed chair, maybe. So if if you can put, like Microsoft, the opposite example, Microsoft right now is going down because of the AI, like AI worries, right? Like AI will it will disintermediate the need for Microsoft, right?
Their software business.
Yeah.
Yeah, sure.
So that is the exact opposite. So now we know exactly why Microsoft is
Mhm.
going down. So at some point, I can make a trade in Microsoft. So um, its earnings haven't gone down yet. It's just fear of earnings going down,
Sure.
right? So, and its PE has gone from, ballpark, like 35 to 20. Um, so now at what PE? So I know, like, I don't think Microsoft is going to zero. I think maybe these fears are overstated. Like they are legit, but maybe they're a little overstated. Um, why is Microsoft even allowing Claude to use its to attach to it, right?
Mhm,
Why can I use Claude? I should be able to only have Microsoft AI using the Microsoft database, right?
mhm,
Excel or whatever, right?
sure.
So um are is Microsoft eventually gonna just offer its own um have its AI good enough? Because right now it's not good enough, right? But eventually, will it be good enough? Like the tech people that I talk to, like I have a lot of friends that I talk to, they're like, yeah, Microsoft is slow, but eventually they're going to fix it and eventually it'll be fine. And it doesn't even have to be as good as Claude Bot. It could just be, or any other AI agent, it could just be almost as good and no one's leaving.
Mhm.
Um, so then at what point do you want to buy that? So, and this is kind of where, okay, now we get into technicals, right? So, um, I know I want to buy Microsoft. I don't know where, but now when the day trader kicks in, you want to buy it when it's like really panicking down, right? Like not when it's just slow down every day a little bit. Then that's the worst. Um, so you want to buy on that pure like acceleration down, or maybe another stupid Claude bot headline that maybe Microsoft gaps down 20 or something.
So I think
Um,
everybody at Trillium would understand the instinct to wanna buy capitulation in Microsoft.
right,
I think that what would differentiate it would be, we're gonna be out of it by the end of the day,
right,
and then you're gonna hold it for the next 20 years.
right. So that's the difference between you can use your when I mean layering all of the different verticals of analysis, right? And one of them is technicals, and then
Mhm.
one of them could be day trading, right? So like your day trading instincts would tell you just wait for that huge gap down, wait for that washout. And then that's when you buy and if you want to hold it, you hold it.
So then, okay,
Yeah. Like
let's sure, go
it
ahead.
j- or you could just a macro thing, like maybe there's an Iran situation and then Microsoft is down on that. Like it makes no sense, right?
Mhm.
Or the tariffs, right? Like gave a good entry to a lot of these things. So it could be something not Microsoft related that takes it down, and now you bought it at a good place.
Okay. I think we should take a step back here. Maybe I wanna like sort of pick your brain a little bit on how you find edge in EV. And what I mean by that is, so I know myself, and I mean, I don't think I'm alone in this, is I think the way I describe Trillium to when people kind of ask me what is Trillium,
Hmm.
right? Um, I kind of describe it as like a big fish in a small pond, meaning we kind of do a very niche. I never know how to pronounce that. Is it niche, niche, whatever? But we'll go with niche. Like, is it in a very niche type of like intraday trading that not a lot of people do, right? Sure, there's some other people that do it. I'm not saying we're alone in the world, but it's not you know, Jim Cramer's not talking about some sitch that happened, today in Wells Fargo
Right,
that we all traded or something like that. It's
right,
a niche form of trading.
right.
Everything that you just described, like looking at the industry and the sector and then, like the earnings and the P, I would expect to hear all of that on Mad Money. And that's just like a metaphor that I think is worth talking about in the sense of like how many eyes are really on this strategy, right? You talk about like Trillium strategies, right? Big institutional hedge funds are generally not doing it. RIAs are not like worrying about like, did you catch the bottom of that like super like
Right.
quick intraday move, right? Like mom and pop are not, trading that sort of order flow off the open type of thing or that headline or did you get those good prints? That's like really like just us. And we focus heavily on it. And I think because of that, we can find edge because we're sort of we're really focused on a very specialized form of
Yes.
trading, and that's why I mean, I actually don't know. It'd be interesting. Maybe I can get the stat, but I mean, like my performance over time has like blown away the S&P 500 in terms of Trillium, right? And
Right.
I would imagine that's true of a lot of day traders. Um, I'm curious how you think about that and how you find edge in what you're doing, given that call it 98% of the people investing in stocks are looking at the exact same things that you are.
Um, So, like, what would you're asking?
Well, like anybody, like any institution is gonna say, "What's the market doing? What are the earnings like? What's the PE? Like, what's the story? What's the
Right.
narrative?"
So
Like,
where's the edge, you're saying?
yeah, like where's the edge in like you
Right,
trading
it's such a
Microsoft long term?
right. The edge is, for example, um, I'm in this, soccer chat. Me and a bunch of friends in our neighborhood, um, have like a friendly soccer game. So one of the guys, this was, what year was it ChatGPT came out?
I think it was 24.
21? 20,
No.
no,
21? No, I mean,
22?
maybe like a version nobody used, but like the big version that people like started using was, I think it was in 24.
No, 22. Anyway,
Okay,
oh, ballpark,
okay.
ballpark. So he just dropped a link. It was January of that year, and, and, uh,
Maybe you're right. Oh, now that I
we
think
we
about it.
we'll just go to the iPhone, check the chart, and
No,
you'll find
I
out.
think you might be right. Okay.
Um, we he dropped it in the chat. It was like January. Check this out, guys. And then everyone just went on it and started just playing around with it.
Sure.
And and people were like just asking it all these weird questions like, "Oh, I have to my kid is having a bar mitzvah, I have to do like a bar mitzvah speech on this week's Torah portion, can you do it?" And then they were posting this AI's like uh Torah portion, like bar mitzvah speech, like giving like this week's portion, blah blah blah, and all the things that could apply to today or whatever it is, and you're reading it and you're like, oh my god! And then just immediately, I knew Nvidia made the chips, and I knew Microsoft was in OpenAI. Just immediately bought Nvidia and Microsoft, and that was it. Like immediately. And so, like, you don't need an edge for that, and to just hold that's really the difference, right? If you want to talk about edge, it's attention span and patience. So is that maybe people don't have that, or people don't have risk tolerance, so they're like getting into something, but then not willing to ride it out. So they have mismatched risk tolerance, but um, buy and sell discipline. Um, so But if you're just gonna buy and then hold, then it just goes.
All right.
So that's really
Hold
it.
on. Alphonse, you just said like, you just described like the most epic legendary trade of all time and glossed over it like it was like not even. I have to ask you like 1,000 questions about that trade.
So yeah, let's go. So
Okay. So because you just described
here, I'll
this.
just preempt all your questions.
Okay.
So one of the big things is narrative, right? And then reality. So narrative can take a stock up on hype, etc. But eventually reality needs to be in line with the narrative. And when it is, that's when the 10-run homers come. So Nvidia is one of them where they're just, I mean, every time they reported earnings, they were beating it by like insane numbers. You remember this? Do
I
you
remember
remember
there was
this?
one quarter in particular that it was, I mean, it was
I mean, it
legend.
was every quarter. If you go look like quarter after quarter, it was just, and the guidance. And I remember like, why is this stock not doubling? They just guided to double their revenues. Why is it not doubling? And um, so there was a lot of money to just buy and hold.
So let me, okay, because you know, it's, this is just like a testament to how good of a trader you are because it's when I talk to a lot of traders, you know, I don't know if you watch these videos or not, but like, I don't know, this is like my, I don't know, 20th one or something like that. And it's funny because one common denominator that I found is like the best traders talk about like really difficult trades to make and just like say it's like as if it's like so obvious, but it's like totally not obvious. So let me explain what I mean by that a little bit. You're just like, okay, you saw ChatGPT in your soccer chat, boom, bought
Right,
Microsoft and Nvidia.
right.
Okay, great. Let me ask you here's a question. You apparently knew Nvidia made the chips.
Yeah.
How did you know that because I could okay, I could describe a lot of very impressive tech advances and the stocks were disasters. 3D printers are coming to my head, okay? And I could do that all day,
Right.
right? So, how did you know that Nvidia, for example, how did you know that they were gonna have to scale Nvidia chips and that the key to this underlying technology, which was only gonna get better and that this wasn't just a gimmick, was going to be stacking these GPUs by the, however many they put in these, billion-dollar data centers, that they were gonna run out of them, and yeah, like, how did you know that?
So, when I say I'm stacking just different types of analysis,
Mhm.
there's like maybe 100 different things I'm doing.
So
Like,
I'd like to unpack some of those because this is
so
I wanna be able to take what you
one
just did and do
one
it
of
myself.
one of them is figuring out, um you play poker?
I do.
So, like the game theory, like gonna I know what you know, like I think what you think that I'm gonna do this and I think so it's like a triple reverse psychology where you go at different levels, right?
Okay.
Um, so it's like if you know that I'm gonna bluff,
Sure.
right? Then you're like, oh, he's gonna bluff. So then I'm gonna have it's not gonna be a bluff. It's actually gonna be like I have the cards.
Mhm.
And then it's like, are you gonna figure out that I've kind of like, I know what you know. Like, I know that you think that I'm bluffing, but I'm not. So are you going to then take it to the second or third level of that game theory kind of iteration? And then how many more levels, right? So like, again, a hard thing to try to put the market or a specific stock is at what level is this stock trading? Like, is it trading on um, earnings or on uh, like right now I have SNDK. I put it on flash supply. Whether or not that's right or wrong, that's kind of like where I have it. Um, and so you kind of want to figure out like, okay, what is this? What's gonna really drive this stock? Because ultimately it's earnings, but what's it gonna drive it right now and for my hold time? So you have to match like how long you plan on holding for um, however long this current logic that's driving the stock. And I think it was just as simple as AI, and that's it. Like, this is the AI pure play. I mean, as pure as it could get. This was the AI pure play, and that was it. And so if you put it on something so simple, and you're like, I'm just buying and holding, and you didn't need to be like an analyst that could have like a crazy model and know every detail about the chip and all this. Like you could have just bought it. Um, and then the support would have been every 3 months when they release earnings, and the guidance was just blowout every single time. So that was another. So it became two things that you could kind of like that are driving it. So one was that initial basic thing, but then now that part's over. Like right, that
Mhm.
part's over.
Sure.
Now it's just guidance. Like um, you would say right now, people are like a concern for the last year or so, or maybe even two at this point. I don't remember. Is the AI paying off for the people buying Nvidia chips? Like, is it paying off for Meta yet? Google, Amazon, whoever is buying them, um, and and so you see like the stock doesn't just endlessly go up anymore, even though they still are kind of beating earnings and beating guidance. Um, and it's been at 180 for what, 3 quarters now.
Mhm.
Um, and so we have another one coming up, but everyone now has doubled their capex, right? Like uh, all these stocks are going down because they're of all the money that they're spending on Nvidia. So you would think Nvidia is going to beat and and going to say amazing things. Like it's almost like we all know that. So um, what is, excuse me, right now we're at a tougher part in the cycle. Like the stock has gone up over the last 3 years tremendously. But right now, like, what are we putting Nvidia on? Like, it's hard right now.
Mhm.
So it's not as easy of a trade back then as it was. I mean, today as it is back then.
So because you were able to find the pure play in this AI that
Right.
and it was trading, it was a stock. Nvidia obviously made the gaming chips, right? And so they already had some sort of underlying earnings, so
Yeah.
there was no hype built into it. And
Yeah.
that's why you were able to make that trade as
Yeah.
opposed to, let's say,
Also, the guidance was just you should look back.
no,
Go
but this was before you bought it before that all
I bought it
started.
before,
Okay.
um, but then like for the first 6 months, like
Okay.
first couple quarters, you just saw it and you're like, okay, oh my God. But also when you started using the AI, like um, like it blows you away.
So
Like it.
it blows you away, yeah.
I mean, did it not?
No. I mean,
Oh, you didn't.
no, of course it does. I mean, actually, it's kind of funny, just by random chance, the person who showed me, my ChatGPT moment was actually somebody showing me their son's bar mitzvah, uh, Torah portion that they did with AI. He's like, "You could have this do anything," and
Ye-
he's like, "Write me a bar mitzvah portion in the style of Dr. Seuss."
Right.
I remember that, like,
Yeah,
that was
it's
that.
insane.
It's insane, but I could also say, like, it was insane the first time I saw a 3D printer. Watson, from IBM was
Okay,
also
but 3D printer, but then how you gonna use it?
I don't know, I'm gonna print this coffee mug as opposed to going to Walmart and buying one. I mean,
Uh,
I can make the growth story is what I'm saying, but you were able to see that and know this is
okay, so back
different.
to that.
Yeah.
So yes, you're right. There were like a lot of technologies like
Yeah,
3D
flying
print.
cars,
There's
I mean, you
so
could say
many
anything.
ideas.
Sure.
And then you could buy, which I did. So I buy all of them.
You
I
buy
bought
all of them.
Yeah, I bought 3D printing, I bought nanotechnology, I bought this, that. I
Okay.
bought all of them. The
Sure.
only ones I don't buy are biotech because I can't figure out there. I have zero edge in biotech. I'm not going to read some kind of abstract and be like, oh yeah, they're going to cure cancer. Like I
Okay.
have no edge there.
Okay.
So I don't even try for in anything biotech. I don't even try. So 3D printing, I was in those stocks, buying them, and um, but so you buy in the hype and you're buying on what you think could be transformative, but then the revenues never match the narrative. So then that's it. Like the
Right.
stock action kind of tells you.
Yeah, I mean, that happens all the time. Like we said, 3D printing, it happened with quantum stocks recently. I mean, I even remember like GoPro when that IPO'd and like went crazy and they said
Oh,
that
that I knew was a short.
I mean, yeah, I mean, it was like a joke like
Right.
that we had on the desk. Like this is a camera on a stick.
Right.
So I guess uh, that's really interesting because
And
you're right.
same with Peloton, by the way.
Peloton, I was a believer in Peloton personally, I guess, but, I'm just like a person who likes to stay in their house, and so the idea of using Peloton and, like, having that be, like, somewhat social was, like, very appealing to me.
Right, but it was priced for like everyone in America having one. It was like
Right.
ridiculous.
Um, yes. Well, first of all, let me take this opportunity to ask you, do you ever short stocks or is it only long?
So mostly no, like I'll do it like, yes, I do short, but my short trading is not great.
Okay,
I don't even know. I would be curious to do like a search on just my short trades and to see if I'm even positive in them.
okay,
Um, but um, yeah, I know that it's not, so I don't even focus. And like Peloton, perfect example. On its way up, like it went from like whatever 20 to 40. This was like
there's during COVID.
during COVID, and at 40, I'm like, this is priced for everyone in America having a Peloton. This is ridiculous. I'm
Mhm,
shorting it.
okay,
And then and like greatest trade I made, shorting it at 40 and covering at 41
okay,
because it went to like 160 or something.
yeah,
Um, and then zero.
right,
So it's like also um, shorting, you could be right. It's like, do you want to be right or do you want to make money? So if you want to be like, sometimes people get caught up in being right. I know Trillium doesn't, but other people do.
sure,
Um, and where I just want to make money. So like shorting I know it was going to go to zero, but who knows where it's going to go first? So
right.
I don't need to.
So that's the trick. It's like whether it's like Peloton or Beyond Meat or, GoPro or any of these things, it's
Beyond Meat, I actually was a bull in. I thought this was going to be. I thought it would be big.
Okay, but the earnings never really materialized.
Yeah.
But isn't that a little hindsight? Like, isn't that like after you look back at the earnings after the earnings quarter where
No,
it
well,
goes
so
down
you're taking
30%?
positions, you're making money, you're making or losing, and then
Okay,
you cut out. So either you either cut out at a small gain, small break even, or small loss, and then you move on.
okay,
And then what you're left with over the years is like most of your P&L is in the 10 big ideas. Like
right,
iPhone comes out, there was like Blackberries, which I
sure,
refused to buy one. I never bought one. iPhone comes out. Everyone in the world is going to have one of these. This is 2008.
mhm.
That's it. I looked at it for 1 second. Everyone in the world is going to have one of these and then just buy Apple.
So you're talking about a lot of tech stocks. Are you a specialist in any, like, one field, or do you pretty much stick
Mm,
to tech? Have you ever
you
bought a
stick to
bank stock or anything like that?
after '08, bank was like they're also hard to analyze because I don't understand how they move or
Or
how or why.
I don't know, a cereal company, or do you just
I
stick to
would, I
tech?
would.
You would?
Yeah,
Okay.
but it's tech is just easier and that's where the explosive growth is. That's where
That's where
that
okay, so tech is really the wheelhouse.
yeah, like
Okay.
yeah.
We're gonna talk about some of your trades. I mean, I know
We
IONQ is a
could
trade we're
over
gonna start up, but I guess, before we, get to, like, the specific trades, I'm just curious, like, do you have a setup that's, like, your bread and butter? Like, this is
so we could talk about the individual
okay,
trades and then there's kind of two ways to do it, right? We could talk about trades and then, okay, what was the logic leading up to that trade?
okay.
Or we could talk about my process and all the different layers of logic and picking trades
Well,
that
let's
apply
start
to
with
that.
that. What's, like, the
So, for
process?
example, IONQ, um, there what like uh, so Nvidia had skyrocketed. AI has been hot for like over a year, and I found this quantum computing stock, and it was $5 at the time, and it had cash. It had, and it was at a on the chart wise, I think it was at a low, like it had consolidated at that level, so you felt comfortable with that level. And I think the market cap at the time was a billion or something like a billion. I don't remember exactly. And I just thought, um, we're at a time now where uh, a billion used to be a bigger number, and now it's just not a big number anymore. And like 10 billion is the new billion. And I just said, just on hype alone, this thing could go 10x. This could be a $10 billion stock
But then okay, so it goes up.
based on. I looked at it as an option.
Okay,
So buying this, I didn't. Either it's going to go to zero or it's gonna go to 50, let's say. So at the time it was 5, and um, the idea was that it was just a mispriced call option. So it was the only pure play quantum stock. It had legitimate technology, whatever they were doing, I'm sure was legitimate or still are. Um, and I bought it just as it had zero hype on it. It was at the bottom end of its range. The company had a cash burn rate, um, but also enough cash to support it for a few years. So I thought it was like buying like a call option that would last a few years. And then sure enough, the AI hype, as I anticipated, spilled over into like, well, what's the next big thing going to be? And it was quantum. And so then that's when things went up. So that's not a play on revenues or on like, oh, I actually have a quantum computer in my house and now I'm
so is that, like, your bread and butter setup in the sense of, like, finding something that
no, that's
hasn't
just
moved yet?
one. That's
No, but
just
I
one.
mean in the sense of finding something that really hasn't moved yet and has some sort of underlying fundamentals, whether it's cash or whether it's earnings, and so it's like Microsoft at the time, right? Like, obviously, Microsoft was trading on a lot of other factors, not just
Right.
ChatGPT, so it's almost like like ChatGPT is an option in that
But you
respect.
knew you knew that um that AI that would take up Microsoft. You knew. Like you knew it.
Okay.
Um I mean, it was just too big.
Mhm.
Like yeah, like we were going back to like the chat GPT. I mean, you talked about like um, the bar mitzvah thing that it did.
And
Like, how
this
does it know like detailed like Talmudic things that only like an expert
yeah.
person who's learning this would
Sure.
know? Like, it's crazy how it knew everything, like everything.
So now IONQ is interesting because, like, obviously that went I don't know what the top was, 60, 70, 80. So was
Yeah,
something,
yeah.
but that no earnings ever materialized. So how do you
Right, it just kinda like they kinda had their own direction of hype, and, like, now they're, like, doing secondaries and buying out
okay.
buying companies, and so they're trying to build out what they are, but when so right now it's still in hype phase,
Mhm.
and it could go back to 5 or 10, or it could who knows what it could do at this point. So that theoretical even though I'm still in it, like, that trade, like, the pureness of that trade, that's over. You wanna load up and then sell all the way up into the hype, and then once you've done that, kinda, like, walk away.
Do you have a typical holding period, or is it just all over the place?
Um, so holding period has to match here's another one of the principles. So holding period has to match your your logic. In IonQ, I wanted to hold like, my logic was that it would it would see an increased hype due to an AI, the AI halo or what a halo effect or whatever you wanna call that. And it ended up being right. Um, and and I wanted to hold that for as long as I could to kinda as long as I could basically, to get, uh because the cash that they had on hand could, like I said, a couple years burn rate. So if I just wanted to hold on as long as I could. It wasn't gonna be like a day or a week or a month. It was gonna be like, "All right, let's see how this thing moves." And it was moving. So, um, the other thing is where the day trading and watching the box skills, so I still have those skills, and so I can watch the box and know like, "Oh, this feels like there's support in here and there's that it's gonna go." Like, you can kinda just feel that, right? And so when that's kinda what, increases confidence and into holding for longer time because you actually see it, like, coming to fruition, like, what you were hoping, it like, you can you see it in the box, and you're like, "Okay." And then it just gives you, confidence to hold for a much longer time. If you don't see that, then you kinda like, "Oh, so now maybe you have less patience."
Do you feel like you can step away, like, from the desk? Like,
Yeah,
from you do?
yeah.
Because when
But
I've
only if I have a size that I'm comfortable that anything can happen.
okay.
Like
Because I feel like
yeah,
when I've done swing trading, I've told myself I'm doing this because, one day I'll be too old to, be just totally zoned in. And so this is a good skill to have. And then I find myself going to lunch and I'm very uncomfortable because maybe some news has come out, or maybe there's like something in the technicals that would make me like want to reevaluate. And that and I just didn't feel like I could, it's just like, I didn't feel like I could really step away. Um, you feel like you can.
so yeah, so when you're just holding, actually stepping away is a good thing because, um, the way to make the most money is to just hands off the keyboard, right?
Mhm,
Like, just buy and then don't sell. Like, the hardest thing is to not sell a stock that has gone up a lot for you, right? Like
mhm,
or, what's even harder, like, buying a stock that's up 50 on the day.
sure.
Like when Nvidia was gapping up on those insane, guidance numbers years ago.
Well, there was, like, that one I don't remember the year, but there was that one year where it was just, like, I think the earning we have to check this, but I feel like it was, like, the analyst estimate was they were gonna make $4 billion, they made 8 in that
Yeah,
coin or something like that,
yeah,
like, they doubled, like, the highest
yeah.
analyst estimate.
So when the stock is only gapping up, like, let's say 10% or 20%,
Right,
then that's a buy. Like, I'm buying that.
okay, interesting.
Yeah.
Do you do any, like, short-term day trading, or is it all
Yeah, so of my positions.
of your positions?
Yeah.
Okay, because maybe you can help me with an
And
issue.
that's when I won't get off the desk. So
Okay,
if, let's say I have a core position in Nvidia and now, like, let's say my base size is 2,000 shares. So now, and if it's down a lot on just a random day like today, and then you buy 1,000 shares, like at that point, that 1,000 to me is extra. So I have 2,000 that I'm not touching, and then I have 1,000, which is a day trade.
Mm-hmm.
And then, and so I'm not leaving the desk until I'm out of that.
So
Or that if it's a swing trade, then and I would buy even more if it went, like today was at 179, 180, and if it went to 175, I would buy more. Then I would leave because I would only buy more. I wouldn't sell if it went down.
maybe you can help me with some specific issues that I've had. Hopefully, I'm not the only one. I doubt it. Um, I asked you if you do day trades because I'm actively day trading and I've tried to incorporate the longer term stuff, the swing trading, and what I find is not only, as I've mentioned, never really made any meaningful progress at swing trading, but it's also kind of made my day trading worse. And I'll give you an example. I think this is going to sound familiar to a lot of people. Some headline comes out, sounds bullish, and I just bought the stock, right? Buying for the world. And then it just sort of trickles off and isn't really working. So my day trader instincts are telling me, I would think this should be up 10%. It's up 1, something is wrong.
Sell.
Get out of this.
Right.
But my swing trading, John,
Right.
is saying I'm eventually going to be right. This is going to be up 12% at the end of the day, and by next week it's going to double. And so just buy more and hold. What can go wrong?
Oof.
And then and then obviously that turns out to be a disaster because I'm mixing 2 skills here. Well, I'm mixing one skill and one lack of skill.
Perfect time to interject here.
Yeah.
You know that sinking feeling in that situation? Do you get a sinking feeling where you're like, oh, do you get that?
Yeah.
Where like,
I know I'm screwed.
and you're angry because this stock should be up 10%, and you're like, I'm gonna lose money in this, and I know it. Like,
Yep.
right? What do you do?
I mean, that's happened to me so many times. I mean, it depends on the day.
What's the track record of that feeling?
Like, how often does it happen?
Like, does a stock go lower
Oh, yeah,
when you get
100%
right?
of the time.
So you know what I got really good at? I used to fight that feeling, and then I know, and this took years. This was like probably the hardest thing to do, the hardest. And it took years, not like 2 years, like I don't know how many years, to just sell that feeling immediately, because I know that feeling.
But it's so weird because what you're describing as like your setup that you've now mentioned 2 or 3 times is just like there's a positive catalyst here. The market hasn't priced it in yet.
Right.
So I have some headline and I think it's positive and the market hasn't priced it in. And it's not like you've never seen a stock, spike, come back down, and then by the end of the day go back up. It happens all the time. So
Right.
it's just, it's one of those things where it's like in a day trading mindset, this really doesn't look very good. But from a swing trader mindset, I guess you could totally see that being something a swing trader would do.
So you know what you could do? Say you buy 10,000 shares.
Mm-hmm.
You could say 5,000 of these are a day trade,
Mm-hmm.
and 5,000 are a swing trade. Or you
Right.
could say 6,000 are a day trade, 2,000 are a swing trade, and 2,000 are I really want to hold it for long
Like
term.
separate it out.
And then, which is also what I do.
Right.
And then when you get that sinking feeling, boom, sell the 6,000.
Mm-hmm.
That's the day trade portion is now over.
Mm-hmm.
And then go from there.
Okay. And let me ask you another hypothetical that I think will sound familiar to a lot of people. It's totally possible when you're day trading and swing trading to have just totally opposing setups. Like
Yes.
it's very possible to have a stock that is just, a swing trading buy, but an intraday short.
Yes.
And like both of those are like clear as day.
Yeah.
It could just be like, this is a super strong story, but Trump invaded
Right.
something. You know what I mean? And the market's going down today.
Yeah.
And so, yeah, like what do you do when you have a longer term obvious buy and a short term obvious
I do it all
sell?
the time. So I trade around my positions all the time. So
Okay.
if I just to use the Nvidia example, like if my base is 2,000 shares, maybe I'm selling 1,000, maybe I'm selling 2,000, maybe I am selling 500, whatever it is. So I'm selling out. But in my mind, I'm long 2,000 shares, like we talk about like compartments. So I compartmentalize. So I'm long 2,000 shares and I'm short 1,000 shares. And in my mind, I have to, and which is net 1,000 shares. And then so in my mind, I have to, now I'm rooting for my own stock to go down to cover that, to buy back cheaper and get back to 2,000.
That's interesting.
And yeah, so that's what I do.
Okay.
And so I'm selling it. I'm shorting.
And
shorting.
I'm curious if you have like sort of any idea for the issue that I referenced earlier, which is I tend to jump into swing trading when it's slow. When I feel like
Oh, boredom.
and that's when I get
Position sizing.
Yeah, and the reason I ask you this is because like let's say somebody off the street, not at Trillium, somebody just like says to me like, should I get involved in day trading, right? I would probably say like almost definitely not, right? Like unless you're going to do this like basically like full time with mentorship, really be all in, give it, a couple of years to see if you can figure this out, like and be okay if it doesn't work.
Oh, you say almost definitely? I just say no.
Oh, okay. Well, I mean, like if you're
The only way to do it is at Trillium. That's
okay,
the
but
only
like,
way to
but
do
I'm
it.
saying like if my son said to me, Dad, should I be a day
Then you have to
trader?
work at Trillium.
I would say you need to come to Trillium,
Yeah.
right? You know, and you need to, have a good trainer. You need to give it your all. You need to say to yourself, I'm giving this at least 2 years and I will be okay. Like if I'm not seeing any progress or anything like that, but this isn't something, it's just the odds are stacked
Yeah.
so far against you being successful that you can't half-ass this.
No.
Would you say to me, John, like, don't try swing trading or you should try it?
No, definitely try it.
Definitely try it.
Yeah. So it's all about position sizing. So
Okay.
back to my first example of the Yahoo, I chose a position big enough to withstand if it went down 40 points.
Okay.
So choose your position big enough such that, I'm sorry,
Small enough.
small enough. So choose a position small enough. You also, again, another principle, it's a good time to talk about it. You want to match up your personality with your trading style. So I happen to be like a patient type of person, which is good for some things and not good for other things. And so that's why I can hold, like my skill set would be in holding a winner.
Does it
So
affect getting out of a loser or are you quick with that?
so remember when I said, so yeah, it used to, because I would be patient with it, right?
Okay.
But then I noticed after years of that sinking feeling and I'm like, I got good at just hitting bids.
Wow.
I mean, definitely don't buy down
Mhm.
and then just hitting bids.
So when you're putting on a position, when you bought, Microsoft or Nvidia or whatever, you are what like, you know, how do you buy that? Is it just like all in one, this is my idea, just like I want 2,000 shares of Nvidia, give it to me, or is it let me buy 500, if it goes down, I'll buy 500 more type of thing?
That day I just bought it
You just bought
because
it.
I don't think it was like it's not like it had just, I don't really remember the chart
Mhm.
exactly 100%. I mean, I think it was up, but overall, like it wasn't like running away or anything. So I was just getting in and
Okay. I really wanted to ask you this question. It's very rare I get to talk to a true portfolio manager.
hmm,
Um,
well,
this
I'm
is
sorry.
something that
Me?
Yes, you. This is something that, Charlie Munger harped on for a long time. I've made it my business to try to listen to everything that man said. So one of the things he used to talk about is this idea of diworsification with a W, right?
Yes, I
Okay,
believe in that.
so just like just like as a quick primer for, the people who maybe, I don't know, have no idea. So the whole idea of diversification is obviously like sure the odds work in terms of the law of large numbers, right? If you flip a coin, it's going to be 50% of the time heads, 50% of the time tails. So if I do it 10,000 times, you'll get it roughly 50-50. But if I do it the next time, do I want to bet my life savings on it being heads? No, because like I'm sorry, I had to say, if there's a weighted coin,
Right,
would I wanna bet my life savings on it turning up to be whatever the weighted side is? The answer is no, because anything could happen in one
right,
flip, right? But diversification is like the same thing, right? If you have good odds on a stock, any one company, something esoteric can
right,
happen. But if you have 30, then, the odds are dispersed and you're much more likely to be successful. And what Charlie Munger points out is like, yes, in theory, that math holds up. But in reality, ideas are never the same. And it's very hard to get even one really kick-ass idea, and to get 30 of them is almost impossible.
right,
And so what people end up doing is what he calls diworsification, meaning adding inferior trades to the portfolio because they're afraid of going all in on their
right.
best idea. So in Trillium terms, right, in day trading land, it happens all the time, right, that I'm maxed out in one kick-ass idea, right? That happens, you know, a couple times a month, I would
Mhm.
say, right? So, but in portfolio land, like, it's rare that you have, like, a portfolio manager saying, "I'm 100% in, XYZ stock." So, do you find yourself a victim of diversification? Like, because
No, no, I never. I concentrate my bets.
so if you had Nvidia and Microsoft, and you're like, "This is the best setup," how do you justify not selling your entire portfolio and buying all of that?
Um, no, I would have I mean, I'm not having 50, 100 I mean, 2 stock portfolio, is that what you mean?
Well, I guess what I mean is, like, you have that idea. This
I would
doesn't
have
come around every day.
I would have like I would say like 80% of my buying power in like the top 5 ideas maybe, the
Okay.
top 5, 8 ideas.
Okay, so that's the answer, is you are relatively concentrated
Yeah,
in a few ideas.
but it's also not just BP, right? It's really like the dollar at risk, right? So a less volatile stock, you would have more dollars worth.
Mhm.
Um,
Because presumably it won't go down as far. You're not risking as much.
right, right.
Right.
So it's really like the dollar risk, not I mean, the beta supposedly, like, if you believe in that, beta.
Okay, but you would sort of really concentrate, 80% of the portfolio in 5 stocks.
For sure. Yeah, I would say I do that.
Interesting.
Yeah, it's not like, 50 stocks, 2% each, like, it's not like
If that's not the
definitely not.
right, okay. So this isn't grandma's portfolio manager here. This is
Right,
this is a different thing.
right.
We're gonna talk about some specific trades.
Sure.
So, just a little different. First of all, some of these charts, we literally had to go into the microfiche to, like, find the charts and some of these things, and, it's kinda hard to know exactly where to zoom in, so we'll try to whatever we talk about, we'll try to do that, like, in the finished production.
Okay,
But, first chart we're gonna talk about is Yahoo, starting in 1996
okay.
and going to whenever you'd like. So, go ahead.
So, Yahoo, again, like, was that first trade where I got angry, and then it kinda, like that's kinda what flipped me from day trading. I had a bad stretch day trading, um, culminating in, losing 20 grand on a trade, and then just saying, "You know what? I'm gonna buy a couple Yahoo and risk a certain amount," and then something that would allow me a very wide stop loss, something I knew wouldn't get triggered or felt wouldn't, and I could just write up, as it doubled and then doubled again. Um, and so, uh, Yahoo, internet had just come out, and these internet stocks are going nuts, and so, um, one of the, um so there's a couple principles at play. One of them, I should say, overarching is, um, I use my emotion, in a accretive way. So you would think, usually with trading, anytime you kind of get emotional is, and then it's a bad result. So what I've done is be able to use emotions in a very positive way. So and we should all individually look into our emotions and figure out how to use them to make money. So, and I'll give you a few examples. So, and this is definitely one of them. Um, so we all get angry. I mean, I get like there's a lot of times where just you're angry right? So what are you gonna do about that anger? Um, that's when I used it to just say, "F it. This is what I'm doing. I'm gonna buy and hold, and I don't care." And I just used that anger as fuel for, to be honest, the patience to kinda hold and allow myself to be right. There are other times where, we talked about, um, where you buy stock in any trade. It could be day trade or you're holding for 10 years, doesn't matter. Where you get that feeling, it's like a sinking feeling, right? Pay attention to your own emotions, and then, um, like, I knew for myself, whenever I got that sinking feeling, more times than not, that stock was going down. And so eventually it took many years. I got good enough, to hit bids when I get that feeling. So those are just 2 examples, of using your emotions, and, I could probably give more if I give it some thought. Um, so I now have this Yahoo position, and, um, just observing it. So one again, so now a kind of a technical principle that I use that I thought was always super, super, super underrated, um, is, the concept of time. So usually when technical analysis, people, they like to look at volume. Like, I don't know, do you look at volume or talk about volume?
Sure.
So I think volume is mostly irrelevant. Like, only on exception will I look at volume, and I can tell
I
you
mean, we
those
could spend the next
exceptions.
3 hours debating that, but
Right.
okay, well.
Okay. Um, what was more important to me was time. So if a stock shot up, um, like Yahoo did or all these internet stocks did. If a stock shot up, I'm just going to make up numbers, from 20 to 100, and then at 100, let's say it topped out at 100 and now it's trading in the 90s. And let's say this run that it had from 10 to 100 took 3 months, and now it's 2 months later and the stock is 91. So it reached 100 and now it's sideways for 2 months. So at that point, in my mind, the time it spends at that price level is more important than any volume. And um, because it shows that all of those people that bought from 10 to 100, all of those people that had it, and now it's at all-time highs, they now had all the opportunity in the world to sell and take profits and move on. And now it's like it's 2 months later and the stock is 91. Um, and so it exhibited that, you know what? This is this is what this stock is. It's not a $10 stock um that you're lucky to sell at 100. It's now like a $91 stock and it's for real. And so um that would uh so time was like a validation of sorts, not volume. And um and so I was always looking to, that's kind of what um how I could hold on for hundreds of points, let's say, and still today. So um so again, going back to this Yahoo example at the time, um if having having gone up and then consolidated for a good amount of time, and then you wanna buy, like, maybe a breakout, right? On, an explosive breakout, right? And yes, that is with volume. Um, where I push back on the volume thing is I kinda like, I guess we can kinda, talk about, uh, 2 different scenarios. One, an explosive move up. So if something is kinda like sideways and sleeping and then all of a sudden huge volume and huge spike, okay, so that's interesting, especially in like a smaller mid cap stock for sure, and especially if there's news. If there's news, then for sure. But if a stock is kinda just drifting up, uh, on no volume, I actually think that that's bullish because there's no sellers. It's like the stock is kinda looking for a price where there's sellers, and so, I prefer seeing stocks kinda drift up almost like, um, just like steam in the air, just like it just goes up, like, uh, and, that's why I almost like no volume because there's no sellers, and that, like, exhibiting and when you are talking about large amounts of time with no sellers, I like that. That's a bullish. I wanna be in that scenario. Um, so that, now let's, like, um, do, like, an exercise where it's where you've seen, like, what would it look like, what's a good example? What a stock that goes let's say you've seen it many times. Stocks go from 10 to 200, and let's say you've seen that so many times. So you know what that looks like, right? So at the time, things were doing that. Stocks, those internet stocks were doing that. And so when it gets to 80, when a $10 stock gets to 50, 80, 100, 120, 200, um, at each point in time, if it looks like all those other ones that, oh yeah, this is what they look like when they go to 200. They stop at 50 and then consolidate and then keep going. So then it gives you confidence to just keep holding. So when you keep seeing your principles line up and your experience line up, then um, that's what makes it so that you're still in the trade as opposed to selling. So now what I would do is, so yes, if I have a $10 stock going to 100, I'm selling. But that sell is still, in a way, it could be like maybe I'm selling forever because I don't know if it's 100 is the top and now it's going to 50, um, or 100 is the top, not just a short-term top, and now consolidates. So there could be where I sell it at 100 and then it goes to 95 and I buy it back, or maybe it goes to 90 or an 80 and I don't buy it back, and then it goes back to 100 and I'm like, oh, maybe this is now going to go, and then I buy it back at 100. So I'll have them so many times where I sell my long because it didn't have the chance to build the time value yet, right? So you sell the spike, and then you're either not buying back or you're buying back cheaper. Um, but in this example I'm making up, sell it at 100, it goes to 80, and then you pat yourself on the back, nice sale. Then it goes back to 100, and you're like, oh God. And then you almost like buy it back. So there are scenarios where I buy it back and I'm like, gosh, I should have bought that back at 80. But anyway, you buy it back at 100 and then it goes down. And now you're like, okay, this happens, right? So then you're kind of managing that situation. Um, all the while, hopefully, like maybe at a smaller size than you wrote up with. That's the goal. Um, and then you can maybe look back 2 months later and it's still at 90 and you're like, okay, this is now like solidifying and validating. And now like, okay, now I'm going to build confidence that I'm going to wait for some sort of explosion or some catalyst, earnings or any news or whatever. And then for the follow through to 150 or whatever it is.
So, when did you get in? Like, what was the
Uh,
original buy?
the original buy was like, I think 130 at the time. This is, I don't know, split adjusted. It might have been $2.
Okay, so it was in, like, 1996, so it's, like, at the
It
bottom of this
so
chart.
no, this trade was probably 98 if I remember
Okay,
correctly.
so before the initial just sort of exponential ramp.
Yeah.
And then it looks like, using these numbers, it's sort of hanging out around 40, and that's sort of like that consolidation at highs that you're referring to.
So that, uh, um, there is do you see that, um, first it's like a small, sideways thing where it kinda spikes up, it looks like a square root sign where it kinda dips down
Sure,
and then has that first spike,
sure.
and then sideways for like it looks like a day, but
Yeah.
on that chart, that day is probably like a few months, 2 months
Okay.
maybe.
Okay.
And then it goes from so it's under 20 and it has that sideways millimeter under 20, and then it spikes up to over 40, right? You see
So
that part?
yeah, no, I definitely see it.
Okay.
So my
So that little bit was probably 2 months, and I knew at that was probably the trade that I knew it would do what it did.
Okay. So I can totally understand from a day trader perspective, seeing that consolidation, picking
Mhm.
a price point and buying the breakout. I don't even think that needs explanation. But what does is, if you're holding the stock overnight and you're doing it, I mean, many, many nights, but
Right.
overnight in general. So this stock during this whole period of time, I mean, I was in elementary school during this, but like this never had earnings or anything like that. There was no
Right.
advertising. There was nothing going on. Right?
I
This is
think they
just
had good revenue. I think it was increasing revenues. It
they were
was
advertising at the time?
Yahoo. I mean, they were
Okay, so they had earnings to support this. That's my question.
I don't remember if there
So
was
this
earnings.
is
It
going
might have been revenues. It
so
might
this
have
is
been.
going from a dollar to
It
120.
might have.
So
Yeah.
there were revenues that were going up. It wasn't just pure hype.
It might have been revenues, but also like, okay, so back then, again, only Howie and Carrie would understand this. We could actually see the market makers buying stock from us.
Okay.
So, if you put up 1,000 shares for sale, you could, and oh, and they also used to pay the spread. So remember I said, oh, they weren't like ticking incessantly with penny spreads.
Mhm.
So say Yahoo was trading 133 by 134, $133 by $134, and you put it up for sale at $134. So if a market maker was paying the spread,
Mhm.
in your mind, you're like, this stock is, if a market maker is paying 134, it's not going to 135.
Mhm.
It's going to 140. So, um, and we could see that on a daily basis. So we had all that information. So trading back then, when I say it's like, it's a different game, like back then, a lot of it was built on seeing the market makers buy the stock or sell the stock, and which market makers. So you knew there were certain market makers like that were good in bank stocks, and certain market makers. Each market maker had each stock had its one or two market makers that you knew were like the person to follow in the stock.
Right, so it's not like it is today where it's just like there's NYSE,
Right.
NASDAQ, and then the ECNs.
Right.
It was
Everything is
there was like
anonymous today.
Goldman Sachs,
Yes.
Morgan
So
Stanley.
you would see Goldman. If you saw Goldman, like anytime you saw Goldman buy anything,
Yeah,
like the whole floor would just go, like, get ready, like to buy. Like,
right.
yeah.
So I guess my question was in this, in that consolidation, call it around in the low 40s. I can understand buying the breakout on an intraday chart, right? A breakout of highs. I get that. And this is, in a momentum stock. But just holding it over, unless there's like fundamentals to sort of underpin that, I can think of times where you had that same consolidation and it stayed up there for months and then imploded. SMCI comes to mind, right?
Right.
So
So today is different.
what do you mean? Oh, today, you mean back
Yeah.
then it was just
Yeah. Yeah.
this
Yeah.
was the, okay.
Yeah.
So this was the thing back then.
Right.
Okay.
So it's like SNDK,
Sure.
nothing matters. The only thing that matters is one day, and we're not even gonna know. It's just gonna go down, 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 down forever. And then it'll come out that, oh, they missed earnings, or oh, there was supplier. There's gonna be something that um we're we're probably not gonna be privy to that information until it already went down like 50%. And
Mhm.
then it's going to be down 50%. And then you're going to be tasked with the impossible decision of, well, is it priced in? Should I buy the dip, or is it over?
Mhm.
Like it's really hard right now,
Mhm.
for something like that.
Okay. So this was just a different time where you could just I get it. Okay.
The game here, like the game back then, and this is like 90s, was less so on seeing on those fundamentals, and more on we saw the market makers accumulating stock.
Okay, so let me
And
ask you just sort of a
and then you see like, oh, Goldman Sachs upgrade. Meanwhile, the entire week before they were like you saw them buying stock.
I guess let me just try to ask you just like as a corollary to today then. This is always like a little bit risky because like we're filming
Yeah.
this at a moment in time and like
Yeah.
circumstances could change.
Yeah.
But as a corollary today, like you're saying like okay, like times were different in Yahoo. How do you feel about like the times today? Like right now at this moment, like twice this week, this past week, I've seen an AI startup just annihilate a
Yes.
legacy industry. I saw it in like somebody came out with like an RIA for tax planning. I want to say it was
Y
I wanna say it was I'm not gonna say the name because 'cause I'm not sure I'm actually right. Um, and it just, like, killed Schwab and
Yeah,
Morgan Stanley.
so I saw that Schwab dip. It
Yeah,
went 107 to 100, and I bought it because I looked at, the chart on Schwab, like
sure.
100 is a great level, um, and now it's 93, so I'm taking a
Well,
loss.
but then the crazy thing about this whole thing and then, like, I saw it in, like, freight logistics
Yeah,
stocks,
and
like,
then
they're
those
all
stocks
down like
got
that,
yeah,
and I
but
saw
those
it
stocks bounced,
sure,
but Schwab didn't bounce.
and then you see it in, like, real estate, like,
Yeah,
REIT
because we don't need office space anymore.
right. So and again, this is always a little bit risky,
Right.
right, to say something like this,
Right.
but, like, it sounds crazy.
So obviously you wanna fade all of this, right?
Well, it sounds crazy, but, like, it also like, you look at the product that came out for Schwab, and it's like, this is exactly what a big piece of Schwab's business is, and, like, it does it. So, like, what they do is so basically I wanna say it was Insurify, but I don't wanna I'm not sure I'm 100% right about that. Like, the company came out with this product that you upload your tax documents, and it optimizes your tax planning, which is what, like, an investment advisor would do for you at Schwab, right? And that's a big thing. People would tell you like, okay, you can optimize your tax planning doing this, and this AI does it for you, just like ChatGPT would write, a total portion or whatever.
Right.
And so it's like, well, it kind of sounds crazy that this small AI startup would just destroy like this whole thing, but like it also kind of just did. And so I don't know the answer.
Right.
I don't. But I guess my question is, are we living in a time like Yahoo? Like, had that, stock, the AI stock in question, like,
Right.
had it been public, is it just a buy until it's not?
So
Like,
you have to, like, figure out you have to put, like, what the stock is moving on.
mhm,
So, um, obviously, Nvidia is not moving on what it was moving on 3
sure.
years ago. Um, these AI threats, so right, I don't know the Schwab business 100%. Um, are they collecting fees off this tax thing, or is it just part of having your money there and you get a free
Schwab?
Yeah.
No, I think they pay the advisors to take advisors like this usually take a percentage of assets. Like, it's
A
not
sh
it's probably not it's probably part of a bigger thing. It's probably like Schwab you go to Schwab and they will do your tax planning and your investment portfolio and, maybe your, estate planning or something like that, but this is a piece of it.
Right.
And so, you would think the services of Schwab are now less valuable.
I just don't think someone who has enough money to have tax planning
Okay.
is gonna end up letting a computer like, I still want a human. The human can use the AI. I still
Right.
want a human at the end, right?
Okay.
That's what I think. I would bet on that. So that's like a trade I
So
would
I think
fade.
so
Like,
just
I'm buying Schwab.
okay.
Um, I bought a little bit at 100, a little bit, enough that I could buy a lot more, and I'm
Mhm.
still waiting to buy a lot more because um, it's just you could just see it's just not going anywhere. It's like a heavy blanket is on and it's taking a nap and it's just sinking into deep sleep.
Interesting.
But, I'll wait for maybe there will be a capitulation and then I could buy it.
Yeah, so I mean, I wonder if like today's sort of uh corollary to, the dot com boom is maybe at least right now as we're filming this is maybe just like the threat of AI to sort of legacy businesses might be overblown.
So well, it's kind of the opposite because the threat of AI is taking stocks down.
Sure, that's what I
Whereas,
mean.
like right,
But what I'm saying, like you're buying Schwab on this. Like you're saying to yourself, like this threat is overblown.
right,
That's the
right,
yeah.
right.
So I mean, like, when you see stocks like CBRE go down 40% or something crazy, like just like, you know, these are some of the most stable stocks there are, right? And they're just like getting annihilated.
Yeah.
Like maybe that's an
Shoot, I
interesting.
missed that. Is that still down 40%?
It's still down a lot. I don't know, I'm at 40, but yeah,
I should look at that.
you should look at that. That was wild. Let's talk about NVEC from 2003. So, all right, we're getting into a time I was actually, coherent. I'd like to hear, I wasn't in like sixth
So
grade or
this
something.
one was, it had like a new again, we talked about you asked there's, so many new technologies, how did you
Sure.
know, right? So this one was a new kind of memory in, MRAM, so it's like magnetic, the first M standing for magnetic, and, it dealt with storing data, like, in a different way than typical, like, DRAM or SRAM or all those other RAMs, um, and it had all these new advantages, and that was supposed to be, it was gonna be the future, right? Turns out, like, it didn't, stock is the same price now as it was 20 years ago. Like, it didn't, um, really take. I had, and this one was one of those low volume, super thin, like small cap, micro cap almost. Had some cash, so was making money, but um, this had a couple different. So one of the sometimes you're gonna find stocks that have two sources of revenue. One slow and stable and low margin, let's say, but then the other half of the business is higher margin and growing super fast, um, and but maybe not as big, right? But you know that, oh, this is on track to explode the company altogether, um, and so this could be a buy. So that was the situation here in NVEC, and I bought it. Um, I think I got in at like 7 originally and did pretty decent. It went to 50 or whatever. Um, but then I fought with it for years, waiting, trying to listening to the conference calls and doing all of um, and waiting for the story that they told every quarter. Oh, we're going to sell these new sensors that are the best new sensors and the best new GPS chips and the best new everything that they say, like, theoretically in the lab was um was better than whatever was on the market, but the revenues never um exploded, like, never matched the narrative. So after enough years, I kind of gave up on the stock. So that's like a good example of um kind of buying something, doing okay, and then selling and giving up on it. And I still, like, look at it from time to time, but um actually I looked at it just recently after a lot of years, just because the all the other memory stocks started going up, and I'm like, oh, maybe the MRAM stocks will go up. And so there's this one, and then there's MRAM is a stock. That was a company spun off from, it was NVEC's competition. Honeywell, I think, had a division inside of it, which they spun out, um, and it's now MRAM stock. So it's symbol MRAM. So I bought a bunch of that last month, and thinking, oh, it's going to be, maybe they'll take it up on this memory, uh, parabolic memory move, and they kind of did, and then whoop whoop.
Now, when
So
you all right,
I
so
took a big loss there.
okay,
But it defined again, so the principle here was when I bought that stock, I knew I wasn't buying it on fundamentals. I was buying it on this, maybe I can get in. It wasn't the beginning. The stock had already moved, but I thought, okay, if this, um, it just felt like there was buying interest and it felt good, um, from like a trading the box perspective. And so I bought a bunch and it went up. I think I got in at 13. It got as high as 17. And I thought it could go to 30 or 40. And then it went to 10.
when you take like okay, so like let's call it a shot, just like taking it like
Right.
that. Like, is this one of those situations where you're making this like 5%? I'm sorry, you're like concentrating like five, like, is this going to be like a 20-30% position or
I
is it?
actually took a big, so from a beta perspective, like I knew it had come from 5, I think.
Mhm.
So buying it at 13, like you're risking, there was a lot. It was a lot.
Okay.
There was a risk. So I wasn't buying like a super ton, but I
Mhm.
had a good amount, and Um, but I had, um, this trade I had categorized a certain way. Like I knew it wasn't early and I knew it was speculative. Um, so when it started going down and at the end of the month and now in February, everything is just getting crushed. So this got crushed with it. So it's like I'm just selling everything and I had sold this. So this isn't something that I'm like, I'm going to hold for a year because I don't have the earnings and revenue part of the picture are just not there yet. And I also know MRAM has been a dream for 20 years. So
Mhm.
I know that it's not reality
So this
just
was
yet.
more of just like, can I catch a hype cycle type
Yeah,
thing?
yeah. And
Okay.
so right, so you have to, when you're doing any trade, you have to predefine what the trade is
Mhm.
and then match your hold time with what you define the trade as. So if I know this is like not a fundamental trade, then I'm not holding it for years, right?
Mhm. Sure.
I'm trying to make a play. Hopefully it works out. And if it doesn't, it doesn't. So you have to define like how much you're willing to risk and the time factor also. You don't want to sit there and rot with it for 8 months.
Mhm.
Um, so yeah. So those, yeah, that would be like the two principles I made that trade with.
Interesting. By the way, before I forget, it wasn't Insurify, it was Altruist that took down Schwab. Insurify was the one that took down a whole 'nother sector of Willis Towers Watson, an insurance broker and all its friends.
Right.
Just a whole 'nother sector just destroyed by an AI company. Like, so we're seeing a big pattern here where just like these, insurance like plugins or whatever you want to call them, are just taking down like real legacy industries that have been super stable forever.
So why this job is hard?
Yeah.
And it's hard. Claude took Microsoft down, right?
Mhm.
550 to 400. Its PE was 35. That was probably too high anyway. We've been complaining about high PE ratios for a lot of these stocks for many years. So now maybe they just are bringing them back down to earth.
Mhm.
Like 400 or a 20p for Microsoft might be about right
Mhm.
because it's seeing through the spend, right? So they're spending all their profits. So we know that so the stock even at 20 PE is uh is still like optimistic
Sure.
because it's pricing in that the profits are going to come and the spend will cut down and it's still
I think the
optimistic.
problem with, Microsoft and also, Oracle to an extent and some of these other players is Microsoft is, obviously like the most diversified of diversified tech companies. And so, yeah, sure, they also have some of this, they have their exposure to, OpenAI and they have their own, AI stuff, but they also have these legacy businesses which may like the software businesses that might get disrupted. I mean, one of the things that we've seen from things like, from the new one, uh OpenClaw, right? And, some of these other ones is if, agentic AI is the way of the future, then all of these, legacy software businesses are just kind of like apps, right? They're just like back end programs that an agent will use. And so I think some, those software businesses, it's kind of the same thing. It's like we've seen like IGV, right? We saw like a huge down move in IGV, just like legacy software being displaced. Um, I don't know. I'm not sure.
Right. That's
It's
why it's hard. It's
yeah,
hard.
yeah,
And they're not like 5 PE
right.
or 7 PE.
Sure.
Microsoft in the 2000s was 7 PE
Mhm.
with loads of cash,
Yeah.
loads of
Would you
cash.
would you say that most of your trades, like your best trades, let's say, are they something like an NVEC where you're trying to catch a hype cycle, or are they like, Nvidia, Microsoft, where you have a huge like real like this is real and I'm in early?
And NVC had decent earnings also and cash and it was like a real company, but
Mhm.
a micro cap.
Okay.
And new products, and so there was some legitimacy. It was real, but which is why it just kinda, went up, but then s and then s but it never kinda continued, so when you have a company that has 2 divisions, let's say, and one is that slow-moving, low-margin business, and then the other business that supposedly with the new product is a little smaller, but more margin and higher growth. Um, but when they report earnings, that consolidated number is never impressive. So, because it doesn't break out, so you can't see that there's a part of the company that could be worth a lot one day, right?
Sure.
And then even worse is the margins. So they'll say, "Oh, look at this company has low margins," and you're fighting. There's a lot of frustration that comes with that because usually that stock is going nowhere.
Okay.
So then you have to have kind of the patience, and hopefully the market will end up proving you right. But those are scenarios, and that happened in NVEC because they had this low margin business and then this high margin potential. Um, and I remember that frustration at the time being like, you can't see, just break it out into two and add them up individually, and that's where the stock should be. So now we can kind of go over into Facebook
Okay.
because
Let's do it.
this was one of the greatest trades that I've made. We've had the ace uh,
Oh, you did an ace on
on
this?
this. Yeah,
Okay,
so a
so
lot of
people have
people,
heard this.
yeah, people have
I
heard it.
haven't heard it.
People have heard it.
I was on the desk. I remember you doing it in real time, but, no, I didn't hear the
So yeah,
ace.
I think it was like 2013. Looking at the chart now, August 2013. You see that.
Yeah,
So it IPO'd in 2012, and I'll take you back. Narrative versus reality.
sure.
So the narrative at the time and why the stock just was horrible for 9 months. Um, it that Twitter, that all the teens were on Twitter. Do you remember this? They're like
I don't
they're like, "Facebook has no future. It's all just old people," and all the teens are on Twitter.
okay.
And that was their logic for why this company was going nowhere to dying. And that Twitter at the time was private, was like the hot thing that you wanted to be in.
Mhm.
So people were just crushing Facebook, just crushing it. And um and I just remember thinking, like, a teen, like, you no, you're not teens aren't buying anything. The ad market is targeting, like, the people spending real money, um, were 20s, 30s, 40s, 50s. Those are the people spending real money, and they're all on Facebook, but you wanna be on Twitter. And I just remember, um, being angry about, like, how stupid are these people, but now you are kinda, like, sinking in this stock because the street just does not agree with you. Um, and then Facebook, put their app on the iPhone, right? So that moment, I remember, I was on the bus on the way home, and everyone's on their phone, and they're all when someone was on their phone at that time, there was one app they were on. It was Facebook, right? Everyone was scrolling Facebook. So, and at the time, internet advertising, um, was a big thing. Like Google, like, had that market, and I just thought, with no doubt, that they would have 100% of the ad market because there were no other apps. Um, so I said, Facebook will have, I was just convinced they're gonna have 100% of the advertising on mobile. And people were still talking about, like, desktop. At the time, anyone on Facebook was on their desktop, if you remember those days.
Well, I remember there being a big question about whether or not they were gonna be able to monetize mobile because, you take it for granted that a mobile phone today can play video and
Right.
images and all that, but at the time, there was a big sort of discrepancy between what you could do on a computer and what you could do on a phone. They weren't equivalent.
I mean, I thought phone advertising would be way better,
Okay.
which it was, obviously.
Okay.
So Facebook was down in the dumps, because of Twitter was that had teenagers, um, and they were unsure about desktop or whatever. So then they would report earnings, and say, okay, this was our first month we ever had mobile advertising, and we started the quarter at, I think they reported, like, I don't remember exactly, like 100 million,
Mhm.
or or I'm sorry. It started the quarter started $0, and it ended the quarter not at 100 million, but at a run rate of 100 million. So like maybe it was 30 million by the end of the quarter or 40 million by the end of the quarter. But then they said we exited the quarter at 100 million run rate. And I was like, oh my God, this is insane, as exactly as I kind of predicted it would be. And then you get on the conference call and they talk about um, how effective the ads were. Like Sheryl Sandberg would have um, anecdotes of like, oh, company XYZ would have their mobile ad and there was 10 times the regular engagement. Like they were seeing huge value added. And I was just thinking like, wow, this is home run. They would have these gap ups on earnings, reporting amazing numbers, and then just sell for 2 months straight or after that. And
Mhm.
just driving me insane where I would kind of buy on that earnings and then just get crushed. And then 3 months later, even better blowout. Buy on that earnings and then get crushed. So now it's like 9 months later and it's end of July. And they reported a number that was so big and it was the third time. And then finally, like, this is the exception to the rule of the volume. Like it just spiked up. Like they beat for the third quarter in a row a monster number like that Nvidia type growth.
Mhm.
And then that's when I just went insane. And it was maybe it went out that night at like 24, 25, and then I bought like 100,000 shares at 27 or 28 or whatever it was.
Right.
And then at that point, I just had to not like do my best to not sell, which when it's at 35 the next day, how are you going to not sell?
Right.
Right. And obviously I sold a little bit there
That's the interesting thing, like, you saw it up huge
and then
on the
bought
earnings,
and then
and
bought.
that's where
Yeah.
you're saying,
Yeah.
you know, that
Yeah.
and that's yeah, that sort of runs a little antithetical to what you're typically, sort of taught to do. Like, there's no consolidate. You're just buying into pure momentum. It's n
Because the numbers were it was just so overwhelming, like the
Mhm.
revenue growth. It goes back to the Nvidia beat. Like these companies are making money. They're
Mhm.
massive revenues. So like when you see that, you gotta you gotta go in. Now is actually a good time to talk about another principle, which is keeping your edge. So um and so and then two principles actually. So talk about emotion. Um you want to at that point in time, like if you are a dejected, like not optimistic person or trader, or like in a, uh, then you're not loading up in, like you were right. You see that you were right, but you're not loading up there. But if you overall as a process are coming into work every day, like with some sort of edge, and anger could give you that edge. Like if you're coming in with anger, I know like at Trillium these days, you don't see a lot of emotion. People are, and that could be a good thing actually. Um, but back then, if you had like people coming in with edge and like anger, I think those guys made a lot
When
of
you say
money.
edge, you mean just like emotional edge, not
Yeah.
not not like
Oh, both.
odds edge.
So both.
Okay.
So no, but I do mean emotional edge.
Okay.
Like you come in like with a chip on your shoulder, angry, like angry, right? Like for me, it's anger. So it's like, um, because you're angry at these morons that are like talking about teenagers and Twitter, like
Mhm.
who are crushing the stock. Um, and so to finally kind of to keep that and then be right, um, you have to keep your edge so that when the time, um, you have to keep your edge of aggression and confidence, um, and maybe not even confidence because going through losing streaks you can lose confidence, but um, you want to keep your edge of being aggressive so that when the time comes that when you really should be aggressive, you're aggressive.
Mhm.
So going back to that MRAM trade that I made, I was aggressive and I knew it was speculative and I made it a big position. And I took a loss, but you know what? Like that loss is not a loss for nothing. That loss is me 30 years later, still coming in with an edge like that I have to be like, my blade has to be sharp. And when I go in, I have to go in big. So now when it's time to go in, when a winning trade will present itself, I'm going in like way bigger, way bigger. So, um, so that being able to, um, you want to put yourself in that, you want to come to work with that right emotional state, and that could be even keel, like, in today's language. But whatever you have to know yourself. So whatever you have to do to keep yourself like aggressive at, um, then you have to bring yourself to that position.
Mhm.
You don't want to have a sitch where at the end of the day you walk home and you're like, oh, why did I buy only 5,000? I should have bought 20,000 or
Yeah.
whatever it is, right? Like, isn't that the worst feeling?
That's the one thing I
Isn't that
do.
the worst feeling when you're right and you didn't buy enough?
That I mean, this is like a whole 'nother video, we could spend hours talking about
Yeah,
this, but, like, I do, like, a monthly review, and I've been doing it for many years. One of the things that I find to be, like, most typical is when I think back about, like, what my biggest losses in air quotes, um, of the month was, it's almost never that, like, a realized loss or anything like that. It's usually something where, like, I knew enough to get bigger and I didn't do it,
right,
right? So it's usually like I bought 20,000 of whatever stock when I could have had 100,000.
right.
And that's like the thing I look back on last year in 2025, and it's like there were several trades where it's like I held myself back out of complacency, pure complacency,
Right.
just like and you think about it, it's like, I'm sure this resonates with so many people. It's like, how many times have I lost $10,000 doing something, like, totally stupid? Just totally stupid, and it's like,
That was how I got to the Yahoo trade.
had I just taken that $10,000 and, like, on whatever trade presents
Right,
itself, say to myself, I'm risking, those 4 stupid trades, I'm
right,
risking an extra 40, like, on this one real trade, and if it
right.
goes wrong, that's okay, but I would that one, like, psychological switch is, like, so powerful if just,
Yeah.
like,
So you're describing literally me.
yeah.
So, um, using your emotion, right? Like, so for me, it's like anger. It's like self-disgust with yourself. Like,
Mhm,
it's like self-hatred, right? But, um, to use that self-hatred in a positive way, not in a negative way. You're not coming to work like down on the dumps. You're coming into work like focus, like fired up to like that you're not going to miss the next one.
mhm,
So whatever it is that will drive you to, like in your example, you should have bought 100 and not 20.
mhm.
Um, Same thing. So like, uh, so I'm making trades. I can make trades uh, all day long, or that. Yes, I might lose, but I'm happy I made the trade in size because it's keeping my edge for the
Keeping it
time.
there's a price you pay for
Yeah,
sometimes
yeah. It's
sharpening
like
that edge.
Yeah, yeah,
Yeah,
yeah, yeah.
that's a really interesting.
Yeah, so it's like when you bet $10 on or 10,000 on black and you lose, that you didn't gain anything.
Right.
But if the loss that I took on MRAM, like I did that knowing that this part of my size here is sharpening the blade for the next real trade that's coming.
That's a really good way to think about That's a really good psychological sort of tool to think about that and look at, like, a losing trade that way and be,
Yeah.
like, happy with it. Like, yes, I lost money, but I gained
But
I sharpened the knife.
but again, before I even made the trade, I knew that.
Okay.
So like I have all these things lined up before I even make the trade.
Yeah, but that's in I guess, to the 99% of people who are gonna listen to this and try to apply your principles to their trading, day trading trades just come out of thin air, like, so it's
Right.
like you don't always have time to, like, "I'm doing this because," it's just, like, reaction, you know?
That's true. Yeah,
So
mine are more calculated.
but it's interesting
Right.
when you look back on it, it's like if I took a rip, it's like, yeah, I got lost, but I sharpened that edge, and
But
there's something there.
eventually, like when you guys are reacting, because I do believe like the golf swing, it's the same swing for the short club or the long, right?
Mhm.
Like, yeah, the little differences, but it's
Sure,
right. They teach you it's the same swing.
sure.
It's the same thing for holding for a year or holding for like a second. It's
Mhm.
like the same kind of discipline.
Sure.
Um, that if you know the time frame that you expect to be paid. So if you're holding longer than the time frame, that it's already not good. Like, you know that, right? So that's the same thing in my trade as well.
Let's talk about Apple in '08. Something was going on back in '08? Well, what so you made this trade.
When did the iPhone come out? August of '08?
I have no clue.
I think so. So Apple had gone on a monster run from '02 or
And that
'02.
was on the heels of the iPod.
Correct.
Okay,
'02 to like '07.
okay.
Okay. Monster run. And I was never a person buying a million songs and buying iPod or like I was never one of those people. So if I was, maybe I would have caught Apple on that ride.
Right.
So Apple already had gone up like 100x, right? I'm exaggerating.
Okay.
Maybe I'm not. I don't know.
Yeah.
Um, and I mean, just to go back real quick, in '02, I actually, I'll never forget, I emailed my friend. I'm like, yo, they're selling songs $1 a song and they're just going to sell millions of them. Like, I think we should buy Apple. And it was 14 and it went to 20 and I sold. And then it went to 2000 or whatever.
Mm.
So anyway, after a bunch of splits, Apple, and it just went up huge. Then they come out with the iPhone. And Apple had real earnings, so it wasn't overvalued. It's like a real company. And then they came out with the iPhone. And so I could, again, put aside the fact that I missed this stock going from 14 to 1400. Like I missed that, but I had no problem buying it at 1400, which
Mhm.
so and then at the time, I guess '08 it had gone down. I forgot exactly like when I bought it. But it had gone down, what is that? Like maybe 50%. Um and then uh and then just coming out of the '08 crisis, I was jacked Apple. And just the same as usual, like every 3 months, revenues were matching, like growth guidance. Also, the stock was never like super overvalued. It was
Yeah.
always like growing earnings at 30% and a 30 PE. So
Mhm.
like that's like another thing. This is a big thing. It's called, if you've ever heard of growth at a reasonable price, GARP, like
I've heard of it.
for the people out there.
Sure.
So that's basically the essence of what I like to. That's basically my starting point for trying to buy a stock
Okay.
is growth at a reasonable price. So
Okay. So this is a totally different trade to me than like NVEC or like this is just like these are real like a fundamental
every
trend.
single one of these trades fit that bucket.
Okay.
So we talk about like principles and like if there's 20 of them and if it checks 17 of the 20, like
Mhm.
for sure that's always like the main one.
Okay.
Um so like that's probably like the main one
Okay.
if there's ever to be one. Um
Apple traded sort of fair, at
yeah,
a low valuation relative to so for years.
years. Yep,
And I guess the like the overriding like narrative there was like it was such a big position in all the indices, like how much more could people buy kind of
right.
thing. And yet lo and behold, like it was just like generational stock.
So and just to compare it to Nvidia, right?
Mhm.
And this is a great comparison. So Apple and I'll give you the naysayer stories on Apple, but Nvidia, knowing and having lived through semiconductors, um, semiconductors were always like 10 PE because they were considered cyclical, and Nvidia is now at like 20 or 30 PE. People are, but with huge growth, right? So the reason why Nvidia is not higher right now is because people are just waiting for that um, moment where they just hit a wall of buying and that's it. There's no more growth.
Mhm.
So whereas Apple, like I guess it's like total addressable market, right? There was always going to be more people buying iPhone. And then they just kept adding. They added like the iCloud. They added, I mean, over the years, right?
Sure.
They added more and more.
Right.
Um, but the revenues and earnings always lined up. Like it never got ahead. It never got like 100 PE. It was always like, okay, if it was 40 or 40 PE, it was 40% growth. It was
Mhm.
always like still in that buy and hold area.
But it's interesting. It's another case where, like, you saw the iPod, and I'm sorry, the iPhone, and anybody who's trading has probably seen that, that
Right,
keynote speech by Steve Jobs where he talks about
right,
it. It's like the, "Oh, and one more thing,"
right.
right? And so that's often like when you see that product and you feel that sort of momentum, that sort of instinct in you, that's like when it makes sense to sort of just go for it.
Yeah,
I
yeah.
like that. That's really cool.
Um, and to go circling back to there's always worries like when you fundamental worries when you're buying. I mean, when you're holding like these kind of any stock really. So Apple at the time had two. One, you don't want to buy. They're like a saying on the street. You don't want to buy hardware stocks like they consider the iPhone like hardware, right?
Mhm.
So for 20 years, it was software was where the money is,
Well, I
and
mean, there's a reason for that.
That's changing right now. It's hardware versus software, but
I think if you look back at the history of just consumer electronics, they tend to go down in price
right,
over time. Like that's why a
right,
TV today costs, a couple $100. It used to
right.
cost that, like just consumer electronics historically have gone down in price. But I think that this is a different type of thing.
So at the time, people were like, "Oh, there's going to be a million competitors," and then to which I
Well,
said,
they were right. There are a million
to
competitors to the
which I,
iPhone.
to it for me, for my purposes, to which I said, when I see a phone that's better than the iPhone,
Yeah,
then I'll sell. And I didn't think that, uh, and Microsoft came out, remember,
sure.
and then
Yeah.
that Facebook came out with a phone that failed. Like everything failed.
Mhm.
Eventually, Google came out. Um, none of, but Samsung, like their profits on the phone were zero. Meanwhile, Microsoft, the other thing, was margins. So on like these technology, consumer electronic hardware type of products, the worry was also margins. And they're like, yeah, Apple's margins will go down. I'm like, okay, so when their margins go down, then I will sell. But their earnings, their margins always held at like 38%.
Mhm.
They never guided down, like margins didn't drift down 37, 36, 35, 30. They never did that.
Mhm.
Um, so that was another worry that if that got, I don't know about debunked is the right word, but like it's like I'm not gonna anticipate margins getting crushed, like, I'm gonna see it, and then when I see it, then I'll sell.
Mhm.
Obviously not at the top, but I'm gonna hold.
It's actually fun. It's so funny that we have Apple as an example because, like, as a day trader, I can totally envision myself like trading just endless Apple keynote calls and, like, losing money churning, like, the keynotes, like, on whether it be on pricing or some new product or, like, battery life, and it's just like, you're seeing the product, you're buying it, and you're holding it for decades,
But
and it's just a
I
totally different way of looking at
and now
things.
fast forward to today, but actually I haven't had Apple for years
Okay.
because then the growth stopped, and then the PE went up somehow.
Mhm.
So somehow it's like 30 times earnings and, like, less people are buying iPhones this year than last year. Like,
Mhm.
I don't want that.
Right.
So, um but if it ever spiked down, I would buy it.
We're gonna talk about Bitcoin here,
Okay.
but first, I had to look up when you told me that you needed to have a
A lo
log chart,
Right.
and
So I'm actually surprised.
I didn't even know what a log chart was.
I wish I had, like, a room of 100 people and who
I'll
knows
be the
about
guy who
log.
say I didn't know what a log chart was. I'll
I'm
be the
assuming a lot of people do, but maybe they don't.
uh, I don't know. It
Uh,
could be that I'm just ignorant, or it could just be that nobody knows what it is. I checked. We don't even have this capability in Shell, so it can't be like people are using it left and right.
right.
Uh, but it's super interesting in Bitcoin in particular when it's very informative chart. So I guess maybe do you want to give like a little bit of just a quick like explanation of what a log chart is? If not, I
Okay.
could do it. But yeah, but because I looked it
Uh,
up this morning.
okay. So, um, every interval is like every, let's say, 3 inches on the screen is a 10x. So if you look at the right side, on the y-axis on the right side, it goes from 1 to 10 to 100 to 1,000, right? So, um, yeah,
So
so
what?
that
So what it's
so
showing, just like
every amount of distance is like, let's say 10x.
Right, so what it's showing you is, like, let's say you have, like, Bitcoin, right? Obviously, like, the move from $1 of Bitcoin to $5 of Bitcoin is a 5x
Right,
versus, like, wherever it is today, 69,000 to,
right,
80,000.
right,
But if you look back at a linear like, a price chart of Bitcoin, that move from 1 to $5 because of the, this just the way the rest of the chart sets up is gonna look like just like a flat line, you won't
right.
even see it.
Like it does there.
Exactly,
Right,
and so using a log chart, like, it'll show that growth, but with a, steep upward, line at, when it went from 1 to 5, and now, like, between 69,000 and 80,000, let's call it, it'll be a flatter line because it's a smaller difference. So it's
right,
showing you, like, the actual impact, in
right,
terms of magnitude.
right.
Super informative chart, really wish I would've known it before. Just thank you for showing me
So,
this.
um, this chart, so two things on Bitcoin. So going back to one of the principles about time value. Um, so we were all making fun of Bitcoin back in like 2010, 11, and 12. We're like, what is this? We're like, I didn't even know what it was. We're like laughing at it. Bitcoin's now at like $100. It's now at 500. And like this computer money, like, what the hell is this? Like,
Mhm,
we thought it was buying like tulips, like worse. Like, I didn't understand what it was.
mhm,
Um, so then, but just hearing about it and forget about trying to buy it. Like, how would I even know how to buy that?
right.
Um, and then, and then, but you just kept hearing about it. So now it's at like 1,000, and we're like just going out of our mind as people. Like, how are people buying this? And this is insanity. And then, a year goes by, and then another year goes by, and it's like, it's still not zero. Like, how is this not zero? We've all seen a stock go from 1 to 1,000 because of, like, a low float, and you can't short it, and then we don't know where the top is gonna be, but we know it's going back to 0, right? So the charts go up and straight back down, right? So we thought the same thing, but it didn't, and then it just stayed. And you could see here on the, log chart. Um, so this thing went from like what, sub a penny, 100x to a dollar, and then 100x to $100, and then another 10x to 1,000, right? Um, and then, from topping at 2014, and then 2 years later, it's still like in the hundreds, like it's not zero, right? So now there's two ways to look at it. And, um, there's one way, which is this thing went to 1,000 and now it's 200. It's down 80%. So like most times you're thinking like, all right, this is garbage, right? But I remember at the time thinking, like, not knowing how to explain myself, but saying, this thing, even at 200, is somehow it's like still like relevant. And then it bottomed at 200 and then went up to 400. So it was then like 400. And I'm like, I don't know what this is, but this is like, I don't know how to explain that this thing is strong and this is something, and I don't know what it is. But like I had just eventually, like, that time had like something changed in my head with it, and I couldn't verbalize it. And then it just started going up. So that now you see um like 2016, like into 2017, it just goes up there. And then I saw, um one day, I think it was like scrolling Twitter or whatever, like of the 999 million garbage things that I've scrolled past Twitter, this one thing made it all worth it. Um, Someone posted the log chart. I had never known or seen a log chart before. So someone posted it, and then and I saw it, and I'm like, oh my God, like that chart just explained everything that I was feeling about it. And I'm like, that's it. Which is that when something doubles 20 times, and then two of those 20 doubles gets unwound, so now there's only 18 doubles. So this thing had gone to 1,000, but you unwind 2 doubles and now it's 200, right? Or 250 to be exact. But and that's all that it did. And I'm like, that's how you got to look at it. It doubled 20 times and only came off 2. So it's like this thing is essentially at its highs and just staying there. And like any trader or whatever, like we talk about like a spike up and then like a $10 stock that goes to 100 and consolidates at 90. This thing consolidating at 200 or 400 is the same thing.
So when you look at this logarithmically,
So now you could see it. Like, don't even look at the if you cut off, like you see how it's like almost like a cup and handle, like um where the low is at 2016 and then it goes up and then it goes up to maybe 500 and then it goes sideways there
sure.
and then it spikes up maybe in 2017
Mhm.
at maybe 600 it starts spiking up.
Mhm.
Like at that point, um I just remember looking at it the whole way and thinking, this is the greatest chart I've ever seen in my life.
That's
Ever,
so
ever,
interesting.
ever, ever, ever by 100 million X, the greatest chart I've ever seen in my life.
I really don't think Trillium traders in general are familiar with log charts. I wasn't. I've never heard anyone else refer to it. And it's interesting because when you look at Bitcoin on a log chart, it has those same sort of feeling as the Yahoo chart where it's just like consolidating
Right.
near at highs, like but from a log perspective. Um and Bitcoin is just such a perfect candidate for this because it's
Yeah.
just essentially 100. People sometimes ask me like, are you worried like AI is going to take over trading? And the answer is ultimately, I think,
No.
well, I think AI might just take over everything just in general. Like,
Mm.
but I think ironically, trading, I think, is like going to be the most resilient. And the reason I think so is just because maybe I'll be wrong. Watch, like, I don't know, there'll be something tomorrow. But like, I think that so much of my trading is trading somebody else's psychology. And human psychology, because it makes no sense, is so hard for a computer to understand. And Bitcoin is 100% obviously, Bitcoin doesn't do anything, right? So it's just a psychological sort of construct about sort of scarcity and, this digital, but it's really just like there's 26 million, I think it's 26 million, that
21.
21 million that will ever be.
Mm.
And so and there's a whole story to it, but it's 100% psychological, right? A Bitcoin's never going to build a building or do anything
Right.
else. And so it's just such an amazing, I find it to be just a fascinating thing for that perspective. Like it's pretty rare that you could trade something that's 100% psychology. Like even like silver and gold and things like that have some uses like in the real world, right? But this is just 100%. And I think
Yeah.
it's just so interesting because of that. So are you still interested in Bitcoin?
Yeah. Um, so this trade, so one of my principles, and we talk about like how I am deciding on stocks. So the GARP is one. Another one is I kind of look at the chart and look at the box and um, sometimes I want to see like a nice chart and then I want to learn about those 4 letters. So I
But
may
obviously Bitcoin has no growth. I mean,
well
like,
I'm talking about stocks now.
right, okay.
So forget about Bitcoin for a second. So because then I'm gonna apply that to this.
Okay.
So um a lot of times it's not like, oh, reading or discovering this company and then typing it up and looking at the chart and then reading how they make money or whatever. That's more times than not, it's, oh, this went up on the filter, like new highs or new lows on the day. Oh, I never heard of these 4 letters before. And then I type it up and then I look at that chart and I'm like, oh, that looks interesting. Let me see what they do.
Sure.
And then that's how it starts.
Yep.
Um,
I have a
so,
hotkey, by the way, on Google Gemini right now, which is, "What does this company do?"
oh,
And it gives me the
I
whole
should
thing.
create that.
Yeah.
Um, so with Bitcoin, when I saw that log chart, I'm like, this is the best chart I've ever seen by a million X.
Okay.
And then at that point, it's like, what does this Bitcoin do? So that's when I s- started looking into it and everything. And I'm like, I have no idea, no confidence, no nothing. But this chart, I'm buying it. And like, not a little bit. Like, um, then, okay, another principle. So then you're making an emotional decision on how how much you're going to buy.
Mhm.
So I'm always between two emotions. It's the point at which um, I'm looking for the least amount of pain, a pain minimization, meaning if I buy too much and it goes and I was wrong and it goes down, I'm going to be in pain. And then if I buy too little and it goes up, I'm going to be in pain. So I have to buy the right amount. I come to a number in my head where it's like I find the least amount of pain, and that's how much I'm going to buy.
Okay.
So that's how I kind of size appropriately.
Okay.
And you have to know yourself, because if you buy too much, then you're going to be quick to hit the bids and it's going to screw up your whole trade. Like
Mhm.
you don't want to, you want to buy a number small enough that you're not going to hit the bids, but big enough that you're not going to hate yourself.
Mhm.
So it's managing, it's like minimizing your self-hate and minimizing your pain of being wrong. So
Mhm.
it's like finding kind of that number in the middle. So that's the number. That's kind of what I did with Bitcoin.
Okay.
Um, and that number could be higher. Like if you have like a high degree of confidence, that number is like, it's not good enough just to make a little bit. You'll still have a lot of
So
self-hate if it goes up and you didn't kill it.
so the only real question I have here is if you're gonna use a log chart, right? So for this log chart to really move down materially, Bitcoin would have to go to just some insane it would have to go to like $100 or something like that for this to really come off. So in order for that log chart to have a meaningful sort of bear signal, the price of Bitcoin would have to actually absolutely implode. That's the risk
Right.
that's the risk you're accepting. So
Yeah.
you're just dying with this thing, and it's just like, this is my position, I believe in
Yeah,
it.
and it's so hard because you don't own it for any fundamental reason. You're just
Exactly.
right. So you have to manage that. So you have to have a position small enough that you know that you own it, that those are the reasons. You
Okay.
have to know why you're like when you're getting in, you're like, okay, I don't know about this computer money, but I know this
Sure.
chart is the best thing I've ever seen.
Okay. That's so
Um,
interesting.
yeah,
But, like, if
so
you were to put any chart that you were to, you look at logarithmically
right.
that went parabolic, like the SanDisk chart, right? It would be similar. Like, let's say SanDisk had an enormous pullback of 50%, right? The log chart would still be sort of, for the most part, up and to the right.
Right.
So, you can't really well, what would be your reaction there?
You gotta put it goes back to, and this is the hardest part of, like, for me right now,
Mhm.
what I'm asking Gemini nonstop, "Why is this stock going down today?
Okay. Okay.
Why was Nvidia down 4 and then up 4 to, like, bounces 8?" Like,
Right.
what happened today?
Sure.
Nothing.
Right.
Um, so it's Nvidia, um, eh, I I was not smart enough, but the smart people probably knew that there was gonna be this demand for CPU in
Okay.
addition to GPU and all these memories,
Mhm.
and, um, and and they load it up and they and by the way, SanDisk PE right now, it's not like it's 100 PE.
Right.
It's 20 PE,
Sure.
growing at, like, 900%.
Right.
But because everyone knows that when this is over,
Mhm.
like, they're only trusting, like, a couple more years of earnings in it. Like,
Mhm.
it's only priced for, like, 2 more years of earnings.
Right.
So even the market is not pricing it. Like, there's no bubble in the market, by the way. Like,
Right.
um
So okay.
So, yeah, just to go back to that Bitcoin chart, it did it twice. So it kinda, went up to 10 that one it actually went from 600. Oh, and by the way, when I loved it at 600, when it went to 1,000, it's still a buy. Like, there
Mhm.
was no difference between 600 and 1,000. Like, same amount of, like that it's
Well,
still a
that's the
buy.
thing with Bitcoin. I mean, it's very hard to say, like, I'm buying it at this
No, but
price because
logarithmically,
right.
it's
Yeah,
still the
sure.
same thing.
Sure.
And so
Um,
when you have that chart, you're like, I'm buying, not only am I buying 600, I'm buying 900. And then when it breaks out, the 1,000 was the previous high.
mhm,
And then when it breaks out to 1,200, that's also a buy.
mhm,
Like, someone who bought at 600 might sell at 1,200, doesn't realize that it's going to go to 10,000. It ended up going to 20 and then consolidating at 10, which is again the same thing. It only just removed one double
mhm,
and then consolidated at 10. And then after like Corona happened and then it dipped back up and then at the end of 2020, it started breaking out again, at which point I was ready for the same thing. I'm like, this thing is not going to 20,000. It's going to 40, 80, I don't know where, but it's going way past. So I had made 2 trades there. Actually, I fumbled the round up to 10,000 because it wasn't available as a stock.
Right.
So I had it. That was a bad story. I fumbled that, but in in 2020, that was where I made up for everything.
We're gonna talk about one more trade, sort of legacy trade, and then you're gonna just to give you to give the audience a little bit of a tease, we're gonna talk about 2 current Alphonse trades.
Okay.
So this is Google from starting in 2004.
So Google IPO'd, and I bought it like soon after the IPO, not originally on the first day. And this was a classic um, growth at a reasonable price. That's exactly why I bought it. And I think it IPO'd at around 50 PE. And I was actually just happy that, so many stocks aren't even profitable.
Mhm.
I was just happy it was making money. Um, and I think it was at the time like of IPO was around $100. And so I kind of scaled in another principle. So like if you want to have a final position of um, let's say 2,000 shares, and you just buy in pieces, like let's say 200 shares, 200 shares, 200 shares. So that way, if it goes down, you're buying down, but you're not really buying down. I guess the terminology we call it scaling in.
Mhm.
Um, so because it's not like you bought 2,000 and you got to 10,000, that would be buying down. My ultimate position is 2,000. So I'm scaling in like slowly a little bit at a time, and then I'm going to stop at 2,000. And we knew, I think even at that time, like Google, like no one who was searching with anything else. Like you knew that if you wanted internet advertising, Google was 100% of that, right? Like, um, and so I was busy looking at that charts of that market, like the internet advertising market, and just saying, okay, this is the total addressable market. So, um, right, a great 1-2 combo, which is what I'm trying to do, is buy growth at a reasonable price with the total addressable market either expanding or like that, the full pie expanding, um, or the piece of the pie expanding into that addressable market.
So how long did you hold Google
I
for?
mean, I had it up until last year, but basically riding every 3 months, earnings are good, uh, stock is good. They go, yes, huge swings up and down, but um, but it always had that earnings growth to support it, and its position in the market never changed. Meaning, like in the internet advertising market, like that position never changed.
I had a very similar trade in Google where, I bought it, I think I bought it way later, like 2011, but I recently sold it. I'm wondering if my reasons are the same as yours.
Probably.
Google's had just a dominant position in a hugely high margin business, a virtual monopoly. And when I look at it, I used to have a Google tab open on my computer. Now I have 3 different tabs, all AIs, right? I'm asking, ChatGPT and Claude or Perplexity even, like, things that I used to ask Google. So, I think it's cannibalizing that. And even if you assume that Google will have the same share in AI that they had in search, which I don't think anyone assumes, right? Even if you assume that, it's many, many, many orders of magnitude much more expensive to run that search, meaning the margins will be so much smaller uh, that I just don't see how you can maintain these legendary profits that have happened. And I sold it around like 160, I think. And
Oh, better than me. I sold at the absolute bottom
um,
at 140 for the same exact reason, and I have no regrets.
I don't have any regrets either because you know what? I didn't know that. Look, at the time, the narrative was all the other AI companies are using Nvidia. They're using ASICs, right? They're using the whatever they call them, the
Uh, Not Tranium. What's TPCs?
TPUs. You're right.
TPUs.
Which are like ASICs chips specifically designed to do their AI, and they were cheap. They're cheaper, but we didn't know that that was going to work as well as it did. We still don't like know like what's going to
Right.
happen, like how this is all going to shake out. But I feel like
Well, it's for certain uses. Those TPUs are for certain uses, and
right
NVIDIA's GPUs are for other uses,
for
and
sure.
there's a market for both. And
Um, yes, I think that it's just like it's a super interesting story. I feel like an idiot for having sold it. Uh, but I think like the game, like the reason I owned it changed
yes,
dramatically. And like it's not like I was sure it was gonna go down or anything like that, but I was sure the game is changing, and I'm sure the reason I was in it was really no longer relevant. And I didn't like know I didn't have that same conviction as to what this was
right.
gonna be anymore, and I still don't. And so I think it's a little okay. It kills me to see it doing what it's doing, and I still think it's an amazing business. It's just I don't know. It, that
I talk about like self-hate, when that's the one trade you would think I sold it at 140, it went to 340. Like
right,
I rotted with this thing it went from 200, this was last year, down to 140 and just being miserable for 6 or 9 months. And everyone in my ear being like, yeah, I haven't done a Google search in 2 years. And I'm like, what? Like,
right.
and I'm just listening to the narratives nonstop. And then I had to just say, you know what? They're right. Like, this is like what's changed. Like, I always said, when someone comes up with a better phone than the iPhone, then I'll sell Apple. When
Sure.
someone comes up with a different Google search, I'll sell Google. They never did. When someone comes up with a better electric car than Tesla, there are electric cars. None of them have the same battery for the same price. You're not getting this, like the BMW is like 30,000 more than the Tesla, right? I mean like apples to
Mhm,
apples.
sure.
And they have then Tesla will, I'll say Tesla is a sell.
Right.
Um and and that moment actually happened to Google. Like there's Tesla's
Yeah.
still by
Yeah, no,
itself,
for sure.
Apple is still by itself, and there's never but that moment actually happened to Google, and I'm like, "You know what? I have to sell it." And I sold it.
So, I it's so tough though, because like, I look at it and it's like Google Gemini is incredible category, if not the leader, at least, certainly in the top
And they have
3,
the habit. It's like I Google,
and
I Gemini. It's like they have
and they have just, like, the install base, and they have TPUs, which are cheaper to for in particular for training, but also for inference, and it's it's just a I don't know. I don't know how this all shakes out. But I will say this, I personally don't mind the sale, because it's so important to stay objective in a
right,
trade, and, like, my reasons changed. I was no longer certain, and, like, obviously, like, when that happens, like, things could, like, a positive scenario for Google could happen, a negative scenario
right.
was like, I wasn't gonna like, I could be sitting here and it could be down,
That's
like
that's a huge principle, is protecting the process.
Sure,
So it's process over, like,
sure,
results. Yeah, it went up, but you have to, like, come in and execute the process, and I mean, we could have, foreseen, like, ChatGPT eating into Google, like, a couple years before
sure,
and have sold it, but it dawned on us at the worst time.
right,
Um, but, yeah, that's one of those where you don't hate yourself.
yeah,
Yeah,
100%.
yeah.
I guess I just wanna kinda close finding out a little bit more about yourself. What are you doing when you're not trading?
Uh, Playing soccer.
Playing soccer.
Um,
When you
yeah.
said it was a soccer group chat, I assumed it was your kids playing soccer. Interesting. So you play soccer.
Oh, yeah, yeah, yeah,
Yeah,
yeah,
interesting. Okay,
yeah,
good to know.
yeah. Yeah, playing soccer year round, golf in the summer.
Nice. Um, what just in terms of just, I guess, learning about markets and stuff like that, or not about markets, what books, podcasts, what kind of things are you listening to
Um,
or reading?
Maybe none. I don't know, I
None?
feel like I could give the podcast, I don't know. Um,
Interesting. You don't find it good for, like, idea generation?
No, so I'm on not I haven't found podcasts for idea generation, but I'm
Okay,
on my idea a lot of my ideas these days comes from Twitter.
okay,
Also, I mean, from all over, like just talking
interesting,
to people, listening, observation, all of the
interesting.
above. Also, like I mentioned before, like seeing like stocks hit filters and just, oh, I never heard of that symbol. Um, and then typing it up and looking at the chart. And so a lot of that. Um, yeah. But now it's changing where it's like, okay, like asking Gemini, like name all the companies in the AI materials space or whatever, right? So it's now probably gonna start being where I'm asking Gemini a lot.
And you've mentioned, you talked a lot about sort of you've been doing this a long time, and you talked about sort of sharpening that edge on your
Yeah,
trades and
yeah,
still staying sort of aggressive, never getting complacent.
yeah.
So I guess with that in mind, as continue to sharpen that edge, where do you hope to be in 5 years?
Oh, I never thought about that. Um, I never it's funny enough, like, I never ask myself that question.
Okay.
I'm just kinda, like, more focused on executing my process, which is very ironic considering I'm a long-term person, right?
Well, it's probably it's
Um, I'm just looking really for the best ideas to like, where we like the risk reward and to make as much money as possible and, I don't know, use it for, some good, charitable, things.
that's a nice thing to hear.
Yeah.
That's,
I would say that that's kinda like one of my things at this point, I guess.
to give back.
Um, I mean, yeah, we all, are donating every year, but, yeah, to maybe take it to a next level where you're, like, really doing major things.
I love that.
Yeah.
That's really good to hear. This was super informative. Alphonse, I can't thank you enough. I'm 100% sure that all of Trillium is gonna find this as, unique and interesting conversation, and, it's been a pleasure chatting with you. I have so much more I could talk to you about if we're not gonna run out of studio time, but, maybe we'll follow it up with a Q&A or something like that, but, this was awesome. Thank you so much for being here. Thank you so much for doing this, and, this is great.
My pleasure. I knew I was gonna get something out of it. I didn't know what,
Okay. I hope you got
but I'm
something.
gonna tell you what I'm getting out of it right
Okay.
now. It just it feels like this whole thing is, like, sharpened my edge, like, I'm ready to, like, go in and
Then it was
just
worth it.
even this conversation is energizing, so,
That's so awesome.
yeah,
That's so good to hear.
yeah,
Thanks so much, Alphonse.
thanks.